momentum, and this is what we want from a show daily. Parag bhai, before we let you go, you've been constructive banks. I'm guessing you would probably want to
adding on every dip. Yeah, every dip I am adding ICICI Bank and HDFC to put it on record. I am not changing my stance at all.
Completely fine. And viewers, again, keep in mind, this is Parag
This
Thakur's
is
view.
long term. Yeah.
This is long term. I repeat, he's a great investor. He need not be right. You have to do your own due diligence before you try and think of what to do. Parag bhai, we've been told by some people to talk about Geo Financial with you, which we will do on Monday. So maybe I'll give you some time to think about it and come back in case. But
no, it's very attractive.
Very attractive. Okay. That's the short answer. We'll get the long answer come next Monday, because now, currently at this point of time, we'll have to call it a day and thank Parag Thakur, Kush Bora and Milan Vaishnav for joining in today and giving us their thoughts. And guys, all of you have a great weekend. In India, we will have a safe weekend, so that goes without saying. Anirudh Sarkar Johnson, co-founder and CEO of Equinova Investment Managers. Anirudh, great having you. Thanks for joining in. Anirudh, were you sitting? I'm forgetting what we discussed last in about cash levels. Wow, that's a bright green. I hope the screen follows that, Anirudh, soon in the day. But were you sitting on any bit of cash? And if so, are you tempted to deploy it right now, or are you in a wait and watch mode?
When it comes to cash, we typically don't sit with much cash for existing portfolios. But even on that side, so typically my cash level would be around 4 to 5%. But of late, I've been sitting at slightly higher cash at around 7 to 8% for the investors. But the good part is any new investors who are onboarding, in those cases, we are kind of deploying a bit slowly. We are not in a rush to deploy for the simple reason that with all the factors which are evolving, I think there's no rush to buy, and every day you get a better price to enter. So any new money we are deploying very cautiously, but I would say by end of this month, we should be completely invested, because I think whatever is happening, valuations are getting more and more attractive, and that is where, I think being too much in cash is not a great idea for a long run.
Anirudh, sorry, the optimism that you're displaying is seen with what you're wearing. I must compliment you on your t-shirt. I love the bright green when the screen is in the red.
That's the only way to see green, actually.
That is the only way to say green. I don't know if you can see me, but I'm wearing red right now. But it wasn't a deliberate choice. Just to ask that when you're deploying cash, what are you going for? Are you going for the tried and tested? The large private banks, the blue chips, which are now at great valuations?
So there's no change in the approach in constructing the portfolio. In fact, in my earlier interactions also, I've mentioned that I'm continuing to bet on the mid caps and the small caps, because the portfolio which we construct is obviously not for the short run, it's for the medium to long run. And one thing which I continue to believe is that the earnings is highest in the small caps and mid caps. Whenever the sentiment turns optimistic from the pessimism which is there, you will find investors wanting to go after all the pockets where earnings are. In fact, if I just look in the market for the last 100 days, say for example from where somewhere in the middle of December to now, small caps have outperformed the large caps, mid caps have outperformed the large caps. So that really shows that it's not about the large, mid or small, it's about where the earnings are. And that is where I would say, even in a market like this, there are days when we see good small cap companies making new highs. And that is where I would say my focus would be there. And I'm not too worried about the large, mid or small.
Anirudh, there was a data, I think from maybe Edelweiss Mutual Fund, but effectively brought to our notice by Sunil Singhania, that in all the periods in the last whatever number of years, where the Nifty is given zero returns or next to zero returns for 17 months, the subsequent 12 months and 36 months have been great. Now you can slice and dice data multiple ways, but this seemed to be uncannily true for multiple instances. So therefore, my question is, while we don't know the extent of this conflict, are you tempted to believe that the next 12 months could give positive returns, or will it depend squarely on how this turns out? This time might be different than the past.
No, absolutely. I would be in the same camp. And, this is something which I've been highlighting to my investors also. If you go back in history and say, so it's good that particular data point was brought out by the institutional report, but I think this is something which I've been highlighting to investors also. If you go back in history and see any bull run is always followed by around 15 to 18 months of markets not doing anywhere. And that's the period when you see the price correction, valuation correction, equities as an asset class becomes a big kind of the question mark in everyone's mind. And this is what we have been living. After making a high in September of 24, we are right now in the 17th month of markets being down. And post that, in fact, if you look at this history and the particular report you're talking about, every big decline has been because of some event. And what we are seeing today is also because of an event. Now, the good part of all these events is every event has an expiry date. It cannot continue for long. Either it can escalate, like for example, the Middle East conflict, either it will escalate very fast or it will de-escalate. It cannot keep happening that, both sides are continuing to fire missiles for the months at end. And whenever the de-escalation happens, all the money which is waiting on the edge to enter, the left out feeling, all that gets deployed very, very fast. And that is where the next 1 year return becomes very, very steep. And any investor who's coming in now, I've been of the view that he'll make a decent mid-teens to high teens kind of a return for the next 36 months annualized. So it's a good time to deploy in the market.
Good time to deploy in the markets, Hiral here. Last time when we spoke to you as well, you have been positive when it comes to looking at the two-wheeler space, looking at the CV cycle. That sector has been ailing right now. Are valuations compelling to look at this sector with what's in place when you talk about the situation on the back of the geopolitical concerns?
Yeah, absolutely. So I would say in the auto space, we are betting on the two-wheeler space because that is more about the domestic consumption. And the good part is, obviously, there the big question mark comes that, if you have oil prices going up, the retail fuel prices, it might go up at some point. Will it impact the auto sales? But I would say that's a bit kind of the far-fetched because the retail fuel supplies continues uninterrupted. Price hikes have not happened, and I don't see a reason for the domestic consumers to not continue the consumption behavior. So I would say that auto anchors, valuation-wise, also they are not very expensive; they are decent, and some amount of price correction has happened. So I would continue to bet on the auto. In fact, auto and auto anchors is my biggest allocation in my portfolio, and I continue to be very bullish on them. Exports within the auto ancillaries is again a big opportunity. And post the number of FTAs which has happened, I think auto exports is definitely something which I'm very positive about.
Okay. So that, So Anirudh, that's with auto. And what happens when it comes to the auto ancillary pack? Because you've been, positive in terms of auto, does that trickle down to auto anch as well?
Yes, absolutely. As I mentioned, auto ancillary, I continue to like. And I think the good part is, if you look at the order books of most auto ancillary companies, I think they are all packed and extremely strong order books from domestic OEMs as well as export market. Good part is, a bit of the impact on the EVs could be there because of the rising the raw material prices and supply chain disruptions which are happening. But I think all this thing is more kind of the short-term phenomena and not something which will materially impact in the medium term to long run.
Okay. Anirudh, just a quick final word. The one sector you think is going to have the fastest rebound? Will it be banks? Will it be IT? Will it be consumer?
I think banks could see a strong rebound for a simple reason that the major damage which has been seen in the banks for the last 1 month, a large part of it is because FI outflows. And FIs, definitely when you look at an index, FI's biggest holding was in the banks. And that is where a lot of the outflows are happening. In fact, there are many big, I would say, sovereign wealth funds, some of them based out of the Middle East, which are seeing good kind of a exit and the redemptions. They are decreasing allocations to emerging markets, and within that ETF, banks in India become a big basket. So part of the damage to the downfall in many of the banks is because of FI outflows and nothing to do with the fundamentals. In fact, valuation-wise, they are becoming more and more attractive. So whenever the rebound will happen, I think banks should see a good rebound. IT, I'm a bit, I'm not too sure whether the rebound will happen whenever the war ends because it's nothing to do with the war. IT is more about what is happening on the AI side, what is happening internationally with regard to the deal pipelines. And that is where I would say the rebound in IT might take a bit of a longer time.
Okay, thank you so much, Anirudh, for joining in, and I hope this optimism carries through. Have a great weekend as well, even as we all keep watching the screen. Now, even as the real estate sector sees slight downturn due to ongoing geopolitical turmoil, Prestige Group is confident of meeting its pre-sales guidance and expansion plans. We're going to be speaking with Irfan Razak, CMD at Prestige Group, to talk about his business outlook. But before we get him in, let me just go across to Jasmeet, who tracks the space and is setting up that conversation for us.
Well, Tamanna, very good morning and thank you for that. If, as rightly said, the infrastructure industry is taking a slight turn in this current stage, but if you look at the overall Q3 of the company did report a strong Q3 numbers where it had a record numbers across various segments. The company did see a record number across revenue, pre-sales and collections, touching the all-time high in the Q3 itself. While the margin saw a slight plunge, this was on the back of the low realization and the old customers selling out their stakes at an older rate, which impacted the overall margin, and on the back of product mix as well. If you look at the overall pre-sales, they have up 39% YY basis and hit the record high at nearly at 4,184 odd crores. If you look at the overall pre-sales, they have taken an uptick on the back of that low base which was in the previous quarter. And that's what's seen momentum going ahead. But it's something to note that the pre-sales of 9 months have touched the peak of what was in the last year, and the management expects to close the pre-sales in this year at a very high levels. Now, if you look at the overall financials, the revenue did see an uptick of 134% on YY basis, while the margins are 22%. The net profit also saw a big jump on the back of the low base in the previous quarter. If you look at the outlook, the management remains very strong in terms of what they expect going ahead. While they do say that they're confident of crossing 30,000 crore in terms of the FY26 pre-sale by the end of Q4. In terms of the other key aspect, they continue to expand their stages in NCR, Pune and Bangalore altogether. So all in all, it's a wait and watch how the Q4 plans are for the company going ahead.
Okay, thank you for that, Jaspreet. Let me go across to Irfan Razak, CMD at Prestige Group. Mr. Razak, always a pleasure to have you on NDTV Profit. Thank you so much for your time. And while we will focus on your business outlook, it would be amiss for me not to ask you about how you're seeing your investments in the Middle East right now with what is happening, drones, missiles raining down, while you have big plans there.
Good morning.
Good morning.
First, Anna, let me tell you, we have no investments in the Middle East.
You have plans?
We had no plans and we have no presence there at all. So we've stuck to our own country, which is, I believe, the safest place today on earth. And things are looking good, but it's geopolitics getting played. Finally, it's the common man that suffers in this whole episode.
No, so what I'm referring to is, I believe there are some partnerships you were exploring with Colliers, etc. Correct me if I'm wrong. There was never any conversation intent, nothing in the Middle East?
No, not at all. I don't know where you got that from. We've had no conversations, and nor do we have any investments or any idea to move out of India. And the only thing that we have is a marketing office in Dubai, and which is still there. And apart from that, there's nothing else. We have no other presence in that country.
Okay, that's fair enough. The marketing office in Dubai and that presence is because you have interest coming in from NRIs living in the Middle East into your projects back home. Do you see an impact there?
Exactly. Now, see, that is where it is. People are, in fact, even in that sector, people are committing and people are buying. So I think even our Middle East office, the Dubai office, has done record sales in this current financial year, and they cater to all markets throughout, whichever markets we are present in India, including Hyderabad and Delhi and Bangalore, of course. So things are pretty good.
Okay. In terms of the outlook that you see in Bangalore, and you're right, the safest place on earth right now, hopefully it stays, everything stays fine as far as India. But in Bangalore, there is another tectonic shift going on, right? That's AI and what it's doing to IT jobs. You seem confident through that as well, Mr. Razak?
AI was, you had to see it coming, and I think AI, in fact, it will expand more. But even to monitor AI, to see AI grow, you need people. And that's where the job growth is coming from. And there's a record take up of office space as we go along. In the financial year, I think throughout the country, there's a big take up of space. I think we've done some almost 100 million square feet in the country, of course, all developers put together. And I think this demand is growing, which is pretty confident. And I believe the RFPs are getting floated and more inquiries are coming in. So office space is there, and that means more jobs are going to get created.
Mr. Razak, good morning, Neeraj here. In the belts where IT was prominent, but but there is this scare, and you just referred to it right now, that things are looking okay. But the antidote, if at all, if needed, a lot of conversation around GCC centers setting up, and that white collar job demand for homes and housing is going to be very strong. You would have a sense of this. How strong could that be?
No, it is pretty strong. Yes, like you rightly said, GCCs are setting up big time in the country, including Bangalore, Hyderabad, even Mumbai and Chennai. So these are the major centers where growth is. And I believe that that is, sort of the beginning. And I don't see any cause for concern. One side, yes, the lower end jobs may have got lost or will be getting lost. But then there has to be a lot of upskilling that happens, and people have to upgrade themselves, upskill themselves for more technical jobs. And that's I think, the future today.
Sir, the other thing is, are you priming yourself for being a part of the potential data center boom? I mean, a 22-year tax holiday was unprecedented in some sense in India. There's a lot of belief of high number of data center construction happening. Could real estate firms like yours participate in that? Do you have plans for the same?
No, I see. This is where it is. We could see it coming, and we believe that data centers are the future. And we've already set up a data center, though we just acted as a GC for a large company, and we've just now concluded and completed a data center in Bangalore. We have signed an MOU with the Maharashtra government, and we are exploring some opportunities in Telangana. And I believe that all these, there's an opportunity, and this has to be pursued. And to add the overall optimism was the budget announcement, which will actually boost the building up of data centers, because I believe that is the future.
Mr. Razak, this is Hira here now. In terms of future development pipeline as well, with the kind of demand that you're seeing, I think the recent one is the land parcel in Chennai. What is that focus area going to be, and how are you seeing that scale up in terms of segments? Is the demand still coming in from luxury? Is it from mid-income, or where is that demand?
See, now we have to have a balance. Obviously, the major demand should come and will come from the mid-income. But luxury of late has done extremely well. And but then luxury has only a niche demand, and there are not too many buyers that will be there in that segment. But there was a pent-up demand. So if you have a good location, great product, and that will sell off the shelf, there's no doubt on that. But if you want volumes, and that volumes will only come from the mid-income, and that's the target audience that we should always address. And I believe you can't go wrong there.
Okay, so that demand is going to come in from mid-income. That's the anticipation. It should come from there, but right now you're seeing it in terms of luxury. So if you're seeing in terms of pricing, how is that trend panning out? Because currently the anticipation is that because of the way raw material prices are trending, there is a possibility of an uptick in prices that could be coming in. Is that the case that you're looking at?
See, now, unfortunately, it's a development in the last couple of weeks, so it's too early for us to call that. And we have to just watch and see how things pan out. We have to hope and pray things settle down and things become normal. But otherwise, with the shortages of raw material and so many other things, obviously, it's going to take a hit. And we just can't say anything just now. It's only we have to wait and watch.
Can you just elaborate, sir, on the shortage in raw material that you're talking about? Are imports getting hampered and supply chains getting hampered across industries also impacting your industry?
It will affect every single industry, because see now, simple things like tiles. If you don't get gas, I think the tile manufacturing will stop. So when there's a shortage, obviously the price goes up of that commodity. Similar thing is, it's all commodities that go into construction, which is steel, cement, tiles, and so many other items that get in answered, even plumbing accessories. So we just have to wait and watch. We have to hope and pray that it's going to be not too prolonged. But if it is, then it's going to be a little stressful.
Well, we will wait and watch, definitely. Thank you, Mr. Razak, for coming in, speaking with us. Always a pleasure to have a conversation with you. And, that I think pretty much sums up why the real estate sector is getting so hit. It's sort of a holding and a sum of all parts of everything that can get hammered. If you come from steel to tiles to bathroom fittings to plumbing equipment to paint, everything that is hit. And if you want to see one basket, to see all of that impact together, manifold, it's in the real estate sector.
Yeah, 100%. But and then you try and think of where the supply chain is getting impacted, which could actually impact so many of these things. And nothing beyond chemicals, right? I mean, just right at the center of it all.
Yeah.
So that's the next conversation from our end. Chemical players, everybody will see an impact, right? And before we get in, Ajay Joshi, founder of Ajay Joshi Chemicals, and he's a chemical sector expert, really. Let's get in Puneet to give us a small picture of what's being penciled in. Puneet.
Well, thank you for that. Just 2 to 3 key points as well, because a very detailed report coming in from Ajay Joshi Chemicals. In that sense, it's a scenario analysis that they've given, also of different companies. But if their assumption of if Hormuz is cleared, a $70 to $80 price for oil could be assumed. But if it persists for more than 3 weeks, this particular war, there is a $150 assumption that they are baking in. It's also the fact that for every $10 per barrel crude increase, India's current account deficit widens by almost $15 to $16 billion is something that they've mentioned. And finally, in terms of a list of companies that they've specifically mentioned, right, which have a high impact because of this war across the functions. So you have Chambal Fertilizers, the fertilizer name, Aarti Industries, Sudarshan Chemical, UPL Limited. So a whole list of companies that could get impacted from this, but a lot more in this conversation about all of this and more.
Well, let's bring. Thanks, Puneet. Thanks for that. Let's bring him in. Ajay, great having you. Thanks for taking the time out. This is Neeraj here. Good morning. Where do you see the biggest issue coming in the chemical supply chain? A lot of people talking about sulfur and the chain, therefore getting impacted accordingly. What's your analysis?
Good morning, guys. See, it's all across chemicals. It's as simple as if potato supplies are restricted, my French fries, my potato chips, my potato vegetable, everything is going to get impacted. So it's a whole lot of chemicals, because majorly whether it is ethylene, propylene, benzene, methanol, sulfur we get by extracting the crude oil from the refineries. So if crude is not getting extracted, crude is not coming, sulfur will also not come. And sulfur goes into fertilizer industry, various other industry, agrochemicals and all that. So it's all across the chemical value chain. But the most impacted ones are fertilizer companies, which require LNG. We import around 60 to 70% of our LNG, and out of that 50 to 55% of LNG flow happens through Strait of Hormuz. So that is gone for now. So fertilizer companies, many of them are already shut or operating at very low capacity, 20 to 30% utilization. Second are ammonia companies which consume ammonia and methanol. So they are also getting impacted severely. Then, of course, sulfur-based companies. So it's all across the chemical value chain for Indian chemical players.
Okay, Ajay. So the point is well noted that almost everything gets impacted. Where is the point of maximum impact?
Okay, so it's fertilizer segment, because fertilizer, it's also related to our food value chain. And if the fertilizer segment, fertilizer companies do not operate now, it will affect the sowing season, the Kharif sowing season, which is approaching up in the monsoon season. So if sowing does not happen, it will then result into reduced agrochemicals demand. It will then affect the agrochemicals industry also. So the fertilizer segment right now, it is in the grave danger, because it affects the entire agri input value chain, in turn agrochemicals value chain, on which many Indian companies rely on. That is the most impacted one.
Ajay, I'm wondering in terms of finding alternatives, because beyond the point now there will have to be short-term and longer-term alternatives found. What are the spaces and the companies which are specific stocks and companies which are well placed to find an alternative quickly, and which are the most vulnerable?
See, most vulnerable are companies where raw materials are 60 to 70% net imported and are crude based. So vulnerable companies are rubber chemical producers like Nosil, companies like RT Industries, companies like Jubilant Ingrevia, Lakshmi Organics, which import heavily the raw materials which are crude based. But there are certain companies which are in the different value chain, companies which are fluorochemistry based, companies like Naveen Fluorine, Gujarat Fluoro, they depend on fluorospar as the key raw material, which is not crude based. Companies which are in the bromine chemistry, mineral based value chain, or companies like Vishnu Chemical. Particularly, I want to highlight Vishnu Chemical also because China is not getting the ore for strontium, because China imports 60% of its strontium ore from Iran. But in India, we have Vishnu Chemical, which is making it locally. So companies which are in the non-crude, non-natural gas, non-methanol, non-ammonia value chain are well placed, plus companies which have localized sourcing or in-house manufacturing process, companies like Anupam Rasayan, plus companies which are in the contract manufacturing business, they are able to pass on the increase in the raw material pricing to their customers. So companies again like Aether Industries, Naveen Fluorine, these are well placed.
Ajay, just because you're an expert at this, and I'm sure a lot of our viewers also wondering the same question I am, just explain to us the concept of this strontia chemical. What is it used in? Where does India have an advantage over China here?
Okay, see, strontium carbonate, the strontium ore is celestine. Now, China imports 60% of its celestine from Iran, which is now getting stuck because China's priority is to get crude and LNG through Strait of Hormuz and not these things. So there we have a company like Vishnu Chemicals, which is self-reliant in strontium ore processing and then producing downstream strontium carbonate chemicals, which goes into like semiconductor, life science, catalyst, multiple end industries. So here we are actually seeing the real make in India and companies backward integrated into raw materials, thereby reducing their reliance on any import dependency. So such are the companies which are immune right now.
Ajay, what's the kind of impact you're seeing in terms of textile companies as well? Because a lot of these chemicals that would start getting used there, are you seeing major downtick?
Of course, it's all across the industries. Like I said, textile is no different because they do use a lot of solvents, bulk solvents, which they import either from China or from Saudi or from Iran. Everything is stuck for them also. And the other big problem is that movement of material. Even though if I am a textile chemical producer or any other chemical producer in India, even though I have old inventory sitting in my warehouse, I'm not able to export also because ships are not available. Rates are crazy. Major shipping companies like Maersk and Costco, they have reduced or completely restricted any trans-shipment or shipment to and from Middle East, Gulf, Strait of Hormuz. So shipping, freight, that is also another issue which is impacting a lot of Indian players, which do have stock, which do have inventories, but they are not able to export or dilute the inventory.
Ajay, there is this one belief that for the short term, in commodity chemicals, the freight costs have gone up so high and the freight is not happening that the companies with existing inventory have seen a price hike and therefore Q4 may be pretty strong. People talk about, acetone, phenolics, blah, blah. I mean, 15 other chemicals as well. One, do you agree with this thesis? And if so, where is it that there could be a point of maximum benefit, even if it's for the short term?
Yes, Neeraj, agree with this thesis because right now, chemical players like Deepak Nitrite, Deepak Fertilizer, GNFC, they bought the raw material in Jan at a reduced price. Right now, they are selling the end product at a significant high price. They are charging premium as high as 120, 150%. This is what I am hearing from market dealers. So yes, this quarter could be a good quarter for a lot of these companies like Deepak, I said, Deepak Fertilizer, Aarti, couple of these companies. But what goes around comes around. The buying that is happening right now in April month, March month and April month, again, they will buy raw material at a higher price. But once the situation normalizes by May, June, they will have to sell their end product at a reduced price. For the upcoming quarter, I mean, it will again result in reducing margins. Right now, in 2 months, they will make good amount of money, but again, their raw material cost will also increase, and end product pricing will eventually come down once the situation normalizes.
Yeah. So short term, Ajay, we are out of time completely, but a quick 30-second answer. We have a plywood maker or a plywood company coming up next. Does that sector get impacted in any fashion because of this supply disruption? Very quickly.
Slightly. Not much, because they do need some coating sort of chemicals which they require, as an input cost might increase, but the export or freight price, that will affect them significantly rather than the chemical pricing.
Fair call. Ajay, thanks so much for joining in and giving us that perspective. Really appreciate your time. We'll bring you back in a few days if you have the time, because I think this was an interesting conversation to just get a sense of what's happening in the chemical supply chain, guys. Yeah. Not too much of an impact for plywood companies.
Right, but rising input costs, not too much of an impact from a chemical perspective. But will this weigh on the wood panel industry with price hikes looking unavoidable? We have a great conversation lined up with Century Ply, but Mahima is first joining in to set it up for us.
Right, so the expectations are, and the channel checks are also suggesting that overall wood panel companies will have to take price hikes because of the input price surge that is happening. The first one is phenol, which they use, which is generally used as an adhesive to bind wood fibers or chips, and rising gas prices have significantly increased the phenol costs, and because of this, it's affecting the laminate industry with nearly daily price hikes, is what the channel checks are suggesting. MDF is the other one, where which is a kind of engineered wood product. The key raw materials such as methanol, urea, etc. have risen around 13 to almost 46%, and because of this, the raw material that goes into making this MDF will see a surge, and price hikes could possibly be on the cards. Particle board has also faced around 40 to 60% raw material inflation because of the source that it comes from. Several of these countries that are affected by war. Channel checks are, however, suggesting that plants won't shut down. The players will aim to maintain utilization and supply also going forward. So this is the overall view of how, because of this entire war situation, wood panel industry or laminate industry can get impacted.
Mr. Keshav Bhajanka, Executive Director, Century Plyboards India, with us on the show. Mr. Bhajanka, very good morning, and thank you for your time to us here at NDTV Profit. Pleasure to have you on the show. Just trying to understand, and we've set it up quite in a detailed fashion, the impact that you're seeing from which segments of that supply chain choke, and will you be taking price hikes as a result anytime soon?
Thank you so much for having me on the show. I think that we can break this impact into 4 different buckets. The first being the obvious one, which is the increase in raw material prices. So yes, chemicals, mainly phenol, formalin, methanol, melamine, all of these are important raw materials for us. And an increase in the cost of the same will have an increase in the cost of our products. Secondly, a large part of our raw material is imported, and there's been a further appreciation in the dollar due to this conflict, which could seem to hit margins again, and which could cause further raw material price escalation. Alongside that, exports have seen a significant headwind. This is because a number of containers are not being dispatched. There's demand that is being choked, because even though the containers are placed, the orders are there, but we can't ship them out. Lastly, domestic demand due to sentiment could be hurt. Thankfully, the last point is the one where we have seen minimal impact. Domestic demand is still strong, and 95% plus of our business is oriented towards our domestic play. So there we see a reasonable level of comfort and safety. As far as chemical prices are concerned, us with the advantage of being market leaders, we have been able to take price increases to pass on the same to the market. This does
Okay. Moving from there on, the second part of your point was in terms of export disruption. Which are the markets that are seeing a disruption right now where you did use the Strait of Hormuz in terms of your exports, and are there any alternatives that you're looking at?
I don't think it is just the Strait of Hormuz. I think that, in general, anything that is traveling westward is facing headwinds. I mean, our dispatches to the east, whether it is to Southeast Asia, whether it is to Australia, all of those aren't impacted as badly. But I think in terms of exports towards the west, whether it is America, whether it is Europe, whether it is the Middle East, all of these have been impacted. I think these are delays rather than cancellations. And there are certain freight hikes that have to be borne by us and the customer jointly. But other than that, I think these delays will lead to a bit of demand being fulfilled with a lag, rather than any meaningful impact on the demand in itself. Like I said, the demand is there. It's just about making sure that your products reach the end customer.
Okay. So that's with regards to overall impact. But Keshav, thank you so much for joining in. Always a pleasure to speak to you. And you're talking about, exports probably getting delayed right now. Not everything that is getting cancelled specifically when it comes to US and Europe. But the major impact is in terms of where availability of raw material. And on that front, the 40% increase that they are seeing in terms of pricing, and that will be passed on to consumers. So where the inflation is overall going to go as well. But let's quickly slip into a short break. On the other side, we will be in conversation with Kinraj Jangid, Professor and Director of Jindal Center for Israel Studies, to focus on the latest developments in the Middle East conflict.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबां केसरी।
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Yo Honey Singh, My Story, India chapter. काउंटडाउन शुरू हो चुका है दोस्तों, सिर्फ 2 दिन है दिल्ली के शो को शुरू होने के लिए। This time it's personal. Book your tickets now on District.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
well, I'm sure we
All right, there's been a nosedive in the last few minutes of trade. 23,400, of course, knocked out. A slight recovery, but very, very volatile market. Very volatile market, deeply in the red. Most indicators bearish. I want to just pull up the India VIX before we get to the next conversation for a second to understand what's happening there. A bit of a spike there as well. So as things stand, there is going to be panic. You're going to see volumes drying up. So the depth of the market also reduces in panic mode, which is why you see sharper moves coming in perhaps. Keep your stomach strong and brace for what will come through the day. You never know when there is a reversal. Meanwhile, the core of everything we're discussing today is what's happening geopolitically. And every day we try and get a variety of experts to help us understand where this war will go. Dr. Khivraj Jangir, Professor and Director at Jindal Center and Israel Studies, is with us on the show today. Dr. Khivraj, thank you so much for speaking with us. Till about 3 or 4 days ago, it was seeming like this conflict may end quickly. After the statements coming in last evening from the new Ayatollah Mujtaba Khamenei, it seems like this will be a prolonged conflict and Iran may not be as quick to end the war as it was being hoped. Is that a correct and fair assessment in your view?
Thank you for this morning. It is indeed not in the case of Iran to really close this war. This war will be in a way declared over by Donald Trump. He does in a way give signal that he's not going to carry on for long. However, he also has to take into confidence the Israeli side. And I think it's the Israeli side which holds much more, let's say, command over the outcome of this operation. The given understanding is that this is a strike which was to explore a chance if the regime can fall. Now with the new leader in office, Iran seems to be giving a signal that that won't be likely outcome for the Israel or America. So Israel would like to continue some major strikes in coming days. And this is what Netanyahu yesterday said, that even if the regime doesn't fall, we will make sure that Iran is weak for a very long time after this operation. So I think they are in a last leg of the battle, but they're trying to really cash on to this opportunity and strike more places of Basij, one of the armed, branch of the Iranian army, as well as the Iranian Revolutionary Guards. What has complicated Israel's operation and America's operations in Iran is the attacks by Hezbollah from Lebanon. So I think that has also got them a bit diverted from the Iranian airspace.
Professor, it's an interesting note that you made. Good morning and thanks for joining in, because the world is looking towards Donald Trump's Truth Social handle to figure out when this conflict will come to an end. You are saying that may not be the case. So to your mind, because you would have had deep studies on the thought process, possible thought process, the genesis of this conflict and the likely outcome, you reckon it's short-lived, or do you reckon it's difficult to say that right now?
Well, wars in the Middle East are usually not short-lived. Wars go on for years. I remember I was in Israel when October 2023 happened, and after 3 months, one of your colleagues at NDTV India asked, when will the Israel-Hamas war end? It goes on for years, and it did go on for 2.5 years. So I think the war with Iran will go on for a long time. The thing is that right now the battle and the way Iran has acted against the Israeli and the American operations has jeopardized international supply chains, has jeopardized the movement of the people. So it has certainly involved far greater number of people and places. And that is something that is going to put pressure on Israel as well as on America to declare it over. By the way, Donald Trump 2 days back, in order to prepare the Israelis, did say this, that there is nothing significant left in Iran to bomb now. Meaning in Western powers, nuclear hegemony all over the world. But India chose not to do that anymore because Iran has some problematic ideas in terms of its foreign policy. Number A, It doesn't recognize the state of Israel. It promotes proxy wars and terrorism in the region. And it has a religious messianic mission to its core of the foreign policy. So I think India's strategic position is also driven by the way Iran has conducted itself in the last, significant Shia population in the country. Significant Shia population in the country. And Iran wouldn't antagonize India's interest, though Iran doesn't mind that kind of a damage to the Gulf countries, because the Gulf countries are more directly associated with the American military alliances. India is not part of the Western world. India is not, the extension of the American power. So I do think Iran has this discretion, and it will have to be India's deliberations one-to-one, that it will really seek concessions from Iran.
Okay. Dr. Kivraj, you started off saying that it could be in the end an Israeli decision in some sense, right? In Israel's corner to call this conflict an end. What could be victory for all three sides for this to, kind of ebb a little bit? I mean, because Donald Trump can call a victory even when there is none, and it's known, which is fine. What can be pacifying for both sides, which is Iran and Israel, for this conflict to...
The purpose of the operation was to weaken Iran. So in a way, he is declaring his victory. He carried out a massive strike and trying to see how much they can now take care of Hezbollah in Lebanon. But I do assume that in a matter of days, it will have to be called off because Donald Trump isn't really seeing anything worth bombing anymore in Iran, as he said, for the last 3 days.
Okay, we have Pankaj Murarka up next to talk about the markets. Pankaj, I'm going to request just 2 minutes more with you because I do want to ask Dr. Kivraj about if Trump is willing to end the war and Israel is willing to end the war, is the new Ayatollah Mujtaba Khamenei showing any signs that he wants to end the war from the statement yesterday? How do you read that?
Well, he won't. And that's what Iran did even in June 2025. When there were 12 days strike on the Iranian nuclear program last year, Iran actually said, we withstood. So this regime will actually say that we failed the intentions of the Western powers and Israel to topple the regime. I do think the fact that the regime will be standing will be counted as a big victory for the regime. What is interesting to note, Iranian difficulties will actually begin at the end of this operation. Iran will have to face itself. There would be a civil war kind of a situation, and the regime will then be challenged from within. So I do think there is enough rhetoric left for Iran to even declare a victory of its own kind. But these are not really victories in substantial sense. We can understand that these are political appropriations of the given realities.
Okay, Professor Kivraj, this was lovely talking to you, and we look forward to maybe having you once again, hopefully after this conflict is over, and hopefully that happens very, very soon.
Thank you.
Thank you so much for joining in. Well, Pankaj Murarka, who's been patient with us today, joins in right now. He was CIO of Renaissance Investment Managers. And Pankaj, thank you so much for being patient with us. But these days, to get some inkling of what the geopolitical specter is like is so important. We had a great guest. I hope you enjoyed listening to him as well. But if you did, Pankaj, and you would have read a lot of other geopolitical assumptions as well, what are those implications for risk assets to your mind, Pankaj, globally and India?
Well, I think, Neeraj, it's a significant event. It does change a lot of things, both geopolitical and economically in the short to medium term, but also in the slightly more long term. Meaning, obviously, it's almost after a gap of 50 or 60 years. That the world is witnessing the next oil shock. Last time it happened was in 1973. And what has changed from then to now is at that point of time, US was at the receiving end of the oil shock, where Arab countries came together and they denied access to oil to US and all the countries which were supporting Israel. It was the same fundamental war between Israel and Iran, which they haven't been able to solve over the last 60 years. And India was probably a small economy, so much less impacted and much less relevant in the global context at that point of time. Obviously, things have changed. If you look at the whole oil map of the world now, US sits somewhere in the middle because US is energy self-sufficient and in fact a marginal exporter of energy. So on an aggregate basis, on a net aggregate country basis, US does not get impacted by higher energy prices. But obviously all of us know that 60% of the world economy or global GDP imports energy. So it's a shock to those 60% of those countries. And obviously the shocks are twofold. One is obviously the price shock, which governments will have to absorb in the short term, but in the medium term that will have to be passed on to the consumers or the users. Because any government cannot absorb it on a fiscal balance sheet for a longer period of time. And more importantly, it's a supply chain shock because now there are issues about availability of that. So I think it will change the energy landscape and the energy strategy of countries in the medium term once we get over this crisis. For the immediate crisis, my assessment is that probably neither parties can sustain this high intensity, escalations for a long period of time. So probably now that we're already 2 weeks into it, probably the high intensity escalations should fold up in another week or 10 days. But more importantly, I think what the medium term risk is, given that Israel has not been able to achieve its fundamental objective, number one, which was regime change, because in Iran you still have the same party and same fundamentalist, there's always a possibility for Israel. It's all about survival. So probably, and now that they've achieved, collectively both US and Israel have decimated Iran's firing power, I think they would not allow Iran to build its firing power or capabilities once again. And so a prolonged escalation can continue on and off basis, on a medium term basis. So I think that's a much bigger medium term risk. From an economy point of view, I think it will test the economic resilience of every country. I think what really stands out for India is India's macroeconomic fundamentals are very stable. If you recollect, post-budget also we had this discussion where we were discussing that India's macroeconomic fundamentals are very stable. So I think India can absorb this shock. Having said that, there's a price to be paid, obviously, but we can deal with it. We are at a time where all the three balance sheets, if you look at in India, are extremely strong and resilient. So the government of India balance sheet is very strong. We've done significant fiscal consolidation over the last 5 years post-COVID. Banking sector balance sheets in India are extremely strong. I'm seeing such strong bank balance sheet in India after a gap of 20 years almost. And likewise, corporate balance sheets in India are very, very healthy. So I think across, levers of the economy, we can absorb this shock, but obviously there is a P&L impact or a cash flow impact in terms of current account deficit, impact on P&L of companies, and there could be some rub-off effect on banking balance sheet as well because some SMEs might be under stress. But I think we can deal with this.
So how do we deal with it as investors, Pankaj? The question then is, if there is this belief and fundamental facts bear out that India's balance sheet is strong, it's one of the strongest economies in the world right now, and perhaps once this war ends, will be, in relative terms, much better placed than others. But as an investor, if you're looking at the screen, and the kind of drop we've seen, I believe 1,200 points nearly on the Nifty since this war started, would you look at this as opportunities to deploy, or is the stomach not that strong?
Tamanna, so I think the long-term strong, balance sheet of India and the growth fundamentals of the growth outlook for India remains resilient despite this crisis. One will have to look beyond the screen over the next few weeks or days to take investment decisions, because the next week or 10 days markets can go anywhere. It's difficult to call that out because markets are still trying to process the implication of that. And always remember that stock markets are short-term discounting machines. They discount earnings 4 quarters out. They do not discount 3 years or 5 years view out there in stock market. So investors having a 3 year or 5 year view, for them, obviously this crisis is an opportunity in that sense. So I think investors will have to take a slightly more medium term view. As I said, India's macroeconomic fundamentals remains very resilient. We can deal with it. India's medium-term growth prospects remains unhinged from this crisis. India will have to think will have to have a strategic response to that in terms of mitigating some of these strategic vulnerabilities that India has always had for the last 40-50 years. And we'll have to probably, have a deeper thought in terms of how do we address those vulnerabilities from a macro perspective. But having said that, India's growth prospects remains unhinged. And in fact, every crisis, my experience of investing in the last 30 years, there's always two sides to the coin. Every crisis that, throws up opportunities in probably some of the new corners of the world and new corners of the economy. So who knows what opportunities can emerge out of this crisis. So I still think from an investor's point of view, they need to look over this crisis over the next few weeks of stock price movement, take a medium-term view, and in that context, I think investing in times like this makes imminent sense.
So Pankaj, where are you seeing opportunity? I know you've been favorable in terms of IT, where you were seeing opportunities some time back, but with the situation right now, where would you advise investors to deploy?
If you see, since the onset of the crisis, we've seen a very sharp correction in financial sector, because obviously whenever the macros are challenged or you see a macroeconomic risk, obviously financials is the first sector to get impacted because of that. But as I've been calling out, balance sheets of banks are very resilient in India. One of the finest balance sheets that I'm seeing after a very long period of time. So financials does become one of the sectors to be buying into this crisis. Take a medium-term view and invest into financials. Consumers have taken a knock because there could be some. The point I'm trying to say is, given that it's a macroeconomic crisis and a macroeconomic shock, and it's not only about India, it's about 60% of the world GDP. When you have crises like this, no company or no sector can escape this. When you have a top-down macroeconomic crisis, the magnitude of impact can vary, but it will impact every company and every sector in some form or other. And it's still early days because companies are trying to deal with the crisis, so one doesn't know exactly how much which company or business does get impacted. For example, on the manufacturing side, we're already seeing some companies calling out. I've heard some of the auto companies have scaled down their production for the month by almost 15-20% and all of that. And I think some of these companies still remain a great investment opportunity as we look beyond this crisis. So I think consumers and autos, which have again taken a big knock in the last 2 weeks in this crisis, present a very compelling investment opportunity.
Okay. Any favorites you want to indicate, if not specific stocks but areas, Pankaj?
As I said, the leading private sector banks look incredibly, attractive to me. Auto companies, I still think that India has a great future. Domestic economy. India, okay, let me also call this out. There are only 4 economies in the world which have a very robust domestic economy, and India is one of them, outside of US, Indonesia, and China. 60% of our growth is domestic consumption, is PFCE. Another 15% is government expenditure. So 75% of our economy is immune to what happens to the rest of the world, except to the transmission of oil prices or energy prices. So all I'm saying is Indian economy is extremely resilient, and at this point of time, it makes eminent sense to bet on Indian economy. We will overcome this shock.
I agree with you, Pankaj, and those are strong words with conviction on this day. Look at how we're relatively placed. We will overcome this shock. It just is about where you are placed as an investor and what you want to do. 23,315 right now on the Nifty. It's looking shaky. We'll have to wait and see if 23,300 holds out or not. Thank you so much, Pankaj Murarka. As we wrap up, just the latest from Donald Trump on Truth Social. Who is saying, and I'm just reading out what he's saying. He's saying we are totally destroying the terrorist regime of Iran, militarily, economically, and otherwise. Yet, if you read the failing New York Times, you would incorrectly think that we are not winning. Iran's navy is gone, their air force is no longer, missiles, drones, and everything else are being decimated, and their leaders have been wiped from the face of this earth. We have unparalleled firepower, unlimited ammunition, and plenty of time. Watch what happens to these deranged scumbags today. Again, I'm only reading out the post from the United States president. He goes on to say they've been killing innocent people all over the world for 47 years. And now I, as the 47th president of the United States of America, am killing them. What a great honor it is to do so. Thank you for your attention to this matter. So all I can say is that the rhetoric is getting sharper. The commentary is getting, you would not think in another time and place that heads of state speak like this, but then we are in that time and place. So we'll have to see the consequences. That is all I can say.
Yep. And the markets are seeing those consequences as well. But hopefully then soon. With that, sorry, Hiral.
Just one quick one, as Tamanna mentioned, that I think Trump is also undermining what Iran is doing where Iran is underestimating them.
Yeah.
So that's where you started off this morning, and that's what we're seeing right now.
That's what it seems like. We'll have to wait and see. The fog of war is difficult to sometimes understand. But it's a wrap on this edition of India Market Open. From the entire team sitting here, the entire team that puts the show together, thank you so much for staying with us. But stay tuned. Ask Profit up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
Yo Honey Singh, my story, India chapter. काउंटडाउन शुरू हो चुका है दोस्तों, सिर्फ 2 दिन है दिल्ली के शो को शुरू होने के लिए. This time it's personal. Book your tickets now on District.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Hello and welcome. You're watching a show that gets all your stock related queries answered. By now you know it's named Ask Profit and I'm Mahima Vacharan and with me is Puneet Zaveri. And Puneet, I think I was just telling Puneet before we started the show that I'm wearing the right outfit morning the markets right now, for the markets at least, because the benchmarks right now are down by about 1.2 odd percent, below the 23,400 levels is what we are seeing, and almost at its day's low point, slightly an uptick from its day's low point. Almost a 300 point of a downtick is what we are seeing right now for the benchmarks. Let's quickly try to pull up the Nifty 50 heat map and see as to what are the counters that are seeing the real pressure in trade today. Hindalco losing the most ground, down 5%, followed by something like an LNT. I think for LNT there is no relief since the past couple of weeks, and I mean, it's down 4% today as well. JSW Steel also down by about 4%. All of this on the back of steel prices is kind of getting hit. Auto yet again in the red. Tata Motors is down around 3% You have Bajaj Auto, which is also under pressure. Eicher Motors also continues to be under pressure. But counters like Ultratech, BL also, seeing that pressure in that range of 3 to 4%. But on the flip side, you have HUL, which is doing fairly well today, up 1.6%. No reason per se, but some probably defensive play on that particular counter. Trent is seeing an uptick of around 1%. Tata Consumer also fairly up by about 1% and Nestle also seeing gains of about 0.5%. Let's try to pull up the sectoral heat map to see as to how sectors are looking like right now. And I'm guessing that the Nifty FMCG will be in the green, and that's the only sector in the green right now, with gains of about 0.3%. But metals losing ground, down by about 4%, followed by defense, which is down 3% as well. PSU Bank, auto continues to be under pressure. Let's quickly pull up the advanced decline ratio because overall, if you take a look at the broader end of spectrum, the picture is not looking good. Worse than what the benchmarks are doing. Back to that 3-digit number for the advances, Puneet.
Low
and that's 3-digit number, and that's how the markets are shaping up like right now.
Well, most certainly, I think what we've seen in the last 1 hour, 150 point fall on the Nifty 50 just between 9:30 and 10:30. What we've also seen is that the Nifty metal was relatively in the red at the start of the trading session, now down 4%. So you've seen Nifty IT, which was the biggest loser, is now almost there, down 0.6% still, but the least down in the sector. So we've seen a change in trajectory even in the market breadth essentially over the last 1 hour of the trading session. Shows you the volatility. The mid cap and the small cap has relatively been over the last couple of days been outperforming the benchmarks, but today going hand in hand in that sense, both for the mid cap 150 as well as for the small cap 250, both down 2% at this point of time. The BSE 500 shows you that individual movers in the trade in terms of what's downtrend. Sterlite, KPR Mill as well as Craftsman Automation. CAT was up 5% yesterday, down 6% today. Laurus Labs and Hindalco are the other ones. In terms of the gainers, you can see how quickly it thins out, right? After the first couple of names, the gainers are just up about between 1 to 2% and not so much in terms of forming a trend as well. But at this time of the show, let me welcome in our guest for today, Sameer Dalal of Natwar Lal and Sons Stockbrokers, as well as Tomit Mehta. He's the head alternate research at Mirae Asset Sher Khan as well. Gentlemen, both of you, thanks so much for joining in today. Largely, Saumil, let me first very quickly get a call from you on the Nifty 50, because do you think that 23,300 has enough legs to maintain that as the near-term support. What would you recommend?
Good morning to everyone. The trend still remains negative. We've been witnessing low tops, low bottom formations, and the stronger sectors like PSU banks, metals have started giving up, forming low tops, low bottom formations, and trading below 20 and 40 daily moving averages, short-term averages. That is a sign of caution now here. The trend is negative. The previous swing lows in the higher degree time frame, like quarterly, monthly, they've broken down. 23,300 is a crucial support, of course, because there is a gap around those areas, 23,300, 23,200 levels. There's a gap formed last year, and if this level breaks on the downside, the next level would be 23,000 and then 22,700. So these levels are breaking on the downside, and the other levels on the downside are opening up. So the target on the downside would be now 23,000, 27,300. So these are the levels which I am looking for, and sell on rise should be the strategy. The Nifty 50 index is looking weak, and I'll be looking to sell the weaker stocks.
Okay, all right. So that's the view coming in on the benchmarks. But let's start taking our queries. Sanjay from Bengaluru is writing the first query, asking about ITC Hotels. He wants to know if this is a good counter to continue to hold for the next 1 year. If not this one, then can he exit this, and any other counter that you would suggest, Samir? A very good morning to you. What is your view on ITC Hotels?
Good morning, Mahima, and thanks for having me on the show. So ITC Hotels continues to remain a positive buy for us. We think the opportunity for the hotel industry in India is extremely strong. The way that they are expanding, new hotels, occupancies, we believe, will start rising over a period of time. So you're getting the stock at a very reasonable level. So I'd say continue to hold on since you already have it. If you're looking for any other hotel stock which you'd like to add to your portfolio, we continue to remain very positive on Indian hotels as well. If you look at the kind of chains that they've got, the brands that they're running, the new hotels that they're opening, we think there's a lot of opportunity there. So that is another one that we would suggest in the space. But both hotel spaces, both the hotel stocks that we mentioned, we would do like.
Got that view, Samir, and welcome to the show. Time now for the first call for today from Bengaluru. Mohan has a stock query for us. Mohan, very good morning. What's your query?
A very good morning. I just want to buy Craftsman Automation. Is it the right time to buy the share for long-term perspective?
Got it, Mohan. And do you have any other auto ancillary in your portfolio? Will this be the first one?
I've got some Lumax Auto Technologies, other shares in auto shares.
Got it. Samir, let me come back to you because Craftsman Automation had a stellar run before we've seen the broader market correction. It is not cheap by any means, but would you recommend Mohan to enter at this particular time in Craftsman?
I don't have a view on Craftsman because we don't cover it, but I can tell you about the auto ang space. I think we remain very positive there. We think India's opportunity for the auto sector is only going to keep increasing. If you look at the kind of car and bike sales, I think over a period of next 3 years or 4 years, you will see them up at least 40 to 50% from the current levels. So, the auto angs will obviously do well, but for this specific company, I would request if you could take it to the technical analyst.
Just quickly on Craftsman, because, stocks up 45% in the last 1 year and touched 8,000 rupees on 5th Jan 2026. So the momentum has been there on the upside for the last 1 year. I think you were also adding a question there.
Yeah. So we have, it's not on an auto ang, but an overall view on the auto space.
As well.
Abdul Rishad from Kerala is asking whether this is the right time to enter any of these automobile stocks, Mahindra, Maruti or Tata Motors. So a combined view on this one, if you can give.
So Amil, over to you.
Okay, so Craftsman, let's start with Craftsman. Craftsman at this point of time, it's bleeding. It's making low tops, low bottom in the very short term, in the medium term. Long term structure still remains all right to me. However, in the short to medium term outlook, I think the stock can go down till 6,350. So that's my view in the short to medium term. So it's not the right time to go ahead and buy in for the long term. Wait for the lower levels. Once it starts making the basing out pattern and then breaks out on the upside, that time it will be a good, buy for long term. Now, Hero MotoCorp has just today broken down below 200 daily exponential moving average. A triangle pattern has broken on the downside. In the short to medium term outlook, I'll be negative on Hero MotoCorp, and I'll be looking for a targets of around 4,900, and definitely remains negative. Bajaj Auto, absolutely negative on the stock. Ending diagonal pattern has broken on the downside, trading below 200 daily moving average. My targets on the downside for Bajaj Auto would be 8,400. So at this point of time, stay away from these stocks. I would say that it's not the right time to enter these stocks. Once it settles down and achieves its pattern targets, that would be the right time to go enter the stocks.
That's the holistic view coming in on the auto space. We've got our next question, which is from Chandan Jain, who's writing us from Hubli, asking about KI Industries. Is bought at the levels of 3,000. Is that correct? Let's try to pull the chart up. Yes, 3,000. So sitting on good profits for sure. Wants to know as to what should be the next course of action for him. Samir, I'll come to you on this one. Right now for this industry and of course the company, copper price is the one concern right now, and the inventory stocking up as well. What's the view like here?
Yeah, so that's one concern. The other concern is the fact that competition in the space is going to increase, right? You have two new players, Grasim and Adani, who are going to be entering the space. And we've seen this with the paint sector. So when new players, that too with deep pockets, with strong branding and reach, kind of enter the space, it creates a problem for the existing incumbents. So for me, at the moment, it's sell. I think valuations are a little rich. Growth is no doubt going to be there, but it's going to come at lower margins because you're going to have to defend your space. So for me, at this point of time, it's an avoid. I think there are better stocks that one can invest in, which has more upside.
Okay, all right. So that's the view on KI Industries. We've got Vinod calling us from Mumbai. Vinod, a very good morning to you. What is your question about?
Yeah, good morning. See, I have some lump sum reserves to be employed in the market. So I wanted on the fundamentals for 3 to 5 year horizon between Eternal and Swiggy, which one I should prefer or I should avoid both for a long term investment. And if I should avoid both, then give me a couple of large cap stocks where I can employ because of the depressed market condition.
Got it, Vinod. Got your question. I'll take this up with Samir. Samir, Eternal or Swiggy or any other large caps that you prefer. But for Eternal and Swiggy, we were just talking about this just yesterday, that Eternal having the highest target price right now by brokerages at that 506 versus its divergence is almost 127% away, right? Plus competition playing its part. What would your view be like?
Yeah, so I've been quite pessimistic on both of these stocks for the simple reason that competition has been increasing. And so let's put it there are two parts of the business. The first, the food delivery business, that is growing at 20%. Now that's become more of a mature kind of business. You're not expecting significant like 40-50% growth. So the operating leverage is not going to be that great. So that part of the business, if I value at 20%, it should be given a certain amount of growth opportunity. And if it's low profitability at the moment, why should I give it high valuation? The second part of the business is quick commerce. In quick commerce, competition is going to increase multifold. There are 4 new players entering or entered the space. So now it's a 7-player market, not even a 6, it's a 7-player market. When you have something that high in competition for something that, you're trying to steal business from Kirana shops, eventually at the end of the day, at some point, the profitability push is going to be pushed back. Now you're valuing these companies at 100, 200 times earnings. Swiggy is loss making at the moment, and then assuming that at some point in the next 2 years they'll be profitable. Let's assume that does happen. Then even at that point, what happens is you're trading at very, very high valuation. So where is your upside from today's price point? Now, unfortunately, a lot of people have gotten in at the higher levels, but for me, both of them are at a point. If you want big profitable businesses at this point of time, it doesn't need to be purely large cap only. But if you want a 15% CAGR return, if you ask me, I mean, I had this discussion, I don't know if on your channel or another one, buy HDFC Bank at 825, 830. Even if it goes back in a year's time to 1,000, once all this noise around this war ends and stability comes about, you're getting a 15% to 20% CAGR return, and you're getting that in the best company in India with very low risk. So why would I not make that investment versus putting my money into something like a Swiggy or Zomato where the risks are much higher?
Got that view, Samir, and definitely, the 20% business growth on food could be something to watch as well, because we're seeing these LPG concerns on restaurants, on cloud kitchens. So we will start to, hopefully that gets negated very quickly in this quarter itself. But actually, Samir, we had a question on HDFC Bank as well, and you right now just gave a view also. So Niva from Chennai actually had a question. So would you recommend entering at this level, and do you have a similar view with ICICI as well?
So I have a clear-cut buy on HDFC Bank. And coming back to what you just mentioned, sorry, I just want to, that you talked about the fact that 20% growth on Swiggy Zomato could be because of the food business. That is temporary. All of these things will resolve itself. So don't focus on the now and the noise. If you ask me, focus on the long-term prospects. The problem is the growth is not so great and the profit is not going to come. Not because that the 20% slowdown, that's not going to happen. It's going to come back. Now, coming to HDFC Bank, like I said, it's a clear-cut buy for me. I think the opportunity is very good. The valuations are decent. India growth story is there. If India growth story has to happen, banking has to do well. HDFC is the leading bank. It's now trading at similar to maybe even slightly lower valuations than ICICI Bank. And you got to remember, they're still repaying some of the HDFC Limited's higher cost borrowing. So the minute the CASA increases and minute they're able to get lower cost borrowing in the HDFC borrowing, you'll automatically see NIMs increasing. So I'm very, very positive on HDFC Bank. It's the top pick in the large space. Then if you want to go into the mid cap, IndusInd and IDFC, still two banks, I say go out, take a call, make an investment. I think you will make a lot of money in this space.
Okay, all right. So that's the view on the banking space, but it's time to take a look at the FNO space, and we have Sharad joining by, and his jacket is indicating exactly what the markets are doing. Sharad, over to you.
Exactly, and I think I'll be wearing this jacket for a couple of more days, it seems like, but there's no respite and nobody knows where the bottom is. And even Reliance is also not supporting that much. It's just in the green. HUL trend, just name a few, but it's a sea of red again. Uncertainty there. Adani Ports, Ultratech Cement, BL, L&T, Tata Steel, all of them falling in trade. Even the VIX, that has also actually moved up. BankX, let's see, to be honest, no major support should be coming in, because the larger constituents, they are dragging more actually if you compare that with Sensex. And remember, there is no expiry or any volatility also. So today, no signs of even short covering, to be honest. A long build-up in certain stocks. Syngene, of course, on their export numbers trend, not that convincing, but still in the green. And let's look at the short covering. HUL and Swiggy, they are something over here to look out for. Remember, the FMCG space is also a defensive play. Of course, at times valuations are questionable, but nevertheless, Street is finding some solace in this sector. Long unwinding for SAIL and Jindal saw as well. Interestingly, the metals have flipped yesterday. They were showing good strength, and that story continues for Nalco also. The stock is down 6%, and even the EMS stocks, that's where the sell-off has also started. PG Electroplast is down 5%. So nothing going actually right for the markets, and we don't know where the bottom will be.
Sharad, thank you so much for getting us those details. I could feel the pain in his voice while addressing how the markets have been, unfortunately. Anyways, taking the next question, which is coming in, and this is on Vedanta as well as Nalco. This is from Sai, who's writing us from Vijayawada. He's bought Vedanta at the levels of 724 and Nalco at the levels of 360. Wants to know if he can hold or sell for the next 6 months. Soumil, I'll come to you on this one. What are the charts indicating for both of these?
Vedanta for a medium-term outlook definitely looks good, but in the very short term, I think it has broken today. It has broken 20 daily moving average and the previous swing low. So at this point of time, in the very short term, please avoid. I would be expecting this stock to go down till 660 or probably 640 levels. So probably at those levels, revisit and then enter the stock, because in the medium-term outlook or the long-term outlook, the prospects are good. The chart structure is good, and I'll be expecting this stock to take support around 640 levels and again start the up move. But at this point of time, stay away.
Got that view, Somil. But the next one also coming to you, Somil, on RPG Life Sciences, bought at 1792 by a viewer Lokesh. She's holding 80 shares. Should he continue to do that because it has fallen from the highs? But your view?
I think in the very short term, I'll be expecting a good bounce here. It is already in the downtrend, and I'll be expecting in the medium term outlook to be a little sideways to bearish. But in the very short term, it has started forming high tops, high bottom, trading about 20 daily moving average. So this bounce, this is just a bounce, and I'll be expecting this bounce to go up till at least 2050 levels, which is the previous swing high. So medium term still remains negative, but in the bounce, probably you can exit the stock.
One more question for you, Somil, and this is coming from Arun, who's asking about Siemens Limited. He's got 200 shares, wants a 6 months outlook on this one. Your view on the charts?
Siemens positive, absolutely positive, trading in a range for a little while now. Probably last 3-4 months it's been trading in a range between 3,000 and 3,400. I'll be expecting this range to break on the upside. Right now the stock is trading above all the averages, above 200 as well. The breakout level is above 3460. So once it breaks out, my next level or the targets would be around 3,800, 3,850. So I'll be pretty positive on this one.
Well, it's time now for the rapid fire round in this edition of Fast Profits. Samir as well as Somil request you to keep your answers on buy, sell or hold so that we can take as many in the next 3 minutes. First one's on IDFC first. Samir likes it. Somil, do you as well, is what Lalita is asking.
At this point of time, hold and probably a buy on declines.
Got it.
Okay. L&T is the next one. Kaushik from Vadodara wants to know if this is the right time to buy. Samir, would you recommend that?
So I think wait a bit, wait for a little further correction closer to 3,200.
Coforge and Birlasoft, Samir, a 2-year view is what Madhukar is asking.
I would recommend a Coforge at this point of time. I don't have view on Birla.
Okay, Canara Bank is the next one. Arvind wants to know if he can expect a bounce back in the next 6 months. Somil, your view?
I'll be expecting the stock to go down till at least 133, 130 levels, and then a bounce is expected.
NHPC bought at 94. Somil, should our viewer continue to hold?
Absolutely. NHPC, I'm positive. Keep a tight stop loss at 72 and hold on for a target of 80.
Raghav wants to know if this is the right time to buy BSE. Samir, your view?
Avoid, sell.
Heritage Foods, is it a good buy at the current rate? Somil is what Mr. Reddy is asking.
I would avoid the stock. In fact, even exit. Not looking good on the charts.
CAM's average price of buying is 705. Umesh wants to know if he can sell or hold. Samir, your view?
I think hold on to CAMs.
Holding Coal India 450 shares at 388, Samir, by our viewers Snigdha. She's asking if she should continue to hold this counter.
Absolutely, hold on right now. With fuel prices and material prices going up, coal will also go up in price and they'll make more money.
For long-term portfolio, should I buy Trent in staggered manners? Samir, the question's for you.
Absolutely, please go ahead and keep buying Trent. I think it's a great long-term investment.
Affle bought at 1945. Is it a good time to average now, Somil?
Affle, I will avoid. I'll be expecting this stock to go down till 1200.
Infosys, 550 shares at the levels of 1265 is what our viewers bought. 2 years view. Samir, your view?
Hold on, you'll get 12% CAGR returns.
Is it a good time to enter Somil Force Motors for the next 6 to 9 months is what Gauri is asking.
I would avoid this stock at this point of time. I'll be expecting a downside target of 18,000.
Okay, our viewer has got 3 lakhs. He wants to invest in a railway counter. Samir, anything that you're liking in the space?
IRCTC and Titagra Rail Wagons, both are looking.
Infosys bought at 1265, Samir, for 550 shares. A 2-year view.
Hold on, I think we just did that.
Okay, NTPC, hold or sell? Shivangi wants to know. Somil, your view?
Positive, absolutely positive on the stock. I'll be expecting a target of 420, 430.
Okay, all right. So that brings us to the end of first rapid fire round. But viewers, it's time to slip into a very short break. But don't go anywhere. We'll be right back answering all your queries.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Yo-Yo Honey Singh, My Story, India Chapter. काउंटडाउन शुरू हो चुका है दोस्तों, सिर्फ 2 दिन है दिल्ली के शो को शुरू होने के लिए। This time it's personal. Book your tickets now on District.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Welcome back. You're watching Ask Profit right here on NDTV Profit. We have, Gaurav Sharma now joining in on the technical side of things. Before I come to you, Gaurav, let me go across, take a very quick question now, and dialing in actually a caller from Hyderabad. Sumant has a stock query for us. Sumant, very good morning. What's your query?
Yeah, good morning to all of you.
Good morning,
I'm
Sumant.
holding 1,200 shares in Bar Cooking Coal Limited. I bought at 42 rupees. So from short-term point of view, do I need to hold this or sell it off because of this West Asia war is going on, right?
Got it, Sumant. Sumant, it's a recent listing, so I don't want to try because it will be difficult to get a short-term view. But actually, Samir, let me come to you because Coal India, you did have a positive view given the uncertainty. Does that theory or thesis continue with Bharat Coking Coal as well?
So Bharat Coking Coal per se is not, it is coal, yes, but it is more about specialty coal which is used in the steel manufacturing process. And as long as steel prices stay up, I think that space will continue to do well. So I think for the short term, given where we are in the situation when it comes to power and energy and coal and all of those, hold on to it. I think you could probably see 42 come back. At that point, you can obviously re-review it and see what you want to do.
All right. The next question that we have is from Ramesh, who's writing us from Bengaluru, asking about Rights India. He's got 1,100 shares at the levels of 350. Wants to know if he can sell or hold, and he's been holding this since September 2024. So he's been a patient investor. Samir, I'll come to you on this one. Any chance with regards? Sorry, Gaurav. Okay, we've Gaurav Sharma joining us now. So Gaurav, I'll come to you on this one with regards to where charts go for Rights. He's sitting on a loss of over 1 lakh rupees. What would you recommend?
See, hi, first of all, good morning to you and to all the viewers. So the stock is trading near its intermediate supports, which are precisely placed at 190 to 190 zones. So as of now, from a shorter term perspective, this will act as a support. But I don't really see this level would hold because the overall trend is negative and the stock is poised south for a further decline towards 180 and lower levels is quite possible. So the viewer has to make a choice whether he has to take such kind of a risk. Otherwise, he can take a stop at 190.
Got your view, Gaurav, and welcome to the show. The next question that's coming in is on Nuvama. Now, our viewer, actually Raj, holds shares at 1,357 rupees per share. Samir, the capital market space, given we've seen so many initiatives by the government to limit futures and options volumes, I think the latest being STT, I think has had an impact on all these counters, right? Would you recommend continue holding Nuvama for Raj at this point of time, average down? What is your view?
Okay, so we got to differentiate transaction-based revenue from wealth management, right? So wealth management is something that we believe in India is still at a very, very early stage, nascent stage, and has huge potential to grow. Nuvama is focusing very aggressively on that space. From that perspective, as the more money that they manage under the wealth management basket keeps increasing, we think the steady stream revenue for them will keep increasing, which will allow them to grow their profitability. Yes, transaction-based revenue could take a hit in the near term, which is why, when you all asked me earlier in the show about BSE, I gave it a sell opinion because I think the transactions will take a hit post 1st of April. And when the volumes fall, obviously the earning capacity of them falls. But Nuvama is not that. So I would say stay put in it. In fact, if it comes down, average on.
Okay, all right. So that's the view on Nuvama, and we've Vasu calling us from Vijayawada. Vasu, very good morning to you. I believe you have a question on Motilal Oswal.
Good morning.
Go ahead, ask your question.
I have Motilal Oswal shares of 725 shares.
Okay, and you want a view on this one?
Yes.
Do you want a technical view or a fundamental view?
Hello.
Okay, I think we have some problem with his audio, but basically he wants a view on Motilal Oswal. And Samir, I'll stick with you for this one as well because he's sitting on a loss of 1.8 lakh rupees. You just talked about Nuvama. What's the holistic view on Motilal Oswal?
So I have a very similar view. I believe Motilal Oswal is now getting more steady stream kind of revenue. So if you look at the wealth management business, that is continuously increasing. The mutual fund business, AUMs are increasing. They're doing AIFs. They just raised a credit fund. So as that part of the business keeps growing and that percentage of the revenue keeps growing, the profits will keep increasing. Motilal Oswal is one of India's better managed companies, if you ask me, in the financial space. And I think this is something you can hold on. In fact, again, same story, averaged at these levels. I think you bought it at too high of a level, too early probably. Now, if you buy at this level and average, I'm sure you'll get back your money and make money on that brown stock.
Good. That's a holistic view on the capital market space now. The next question coming in is on SBI Cards, bought at 820 rupees per share by Ashish. Gaurav, he's holding 780 shares. Should he average down right now? What would be your view?
Yes, they should consider averaging because the stock is gradually heading towards their long-term support levels, which are somewhere around 660. So another 5% downside, what I can see in this stock. So these are good, attractive levels to average it out.
Okay, all right. So that's the view on SBI Cards. We've got Ashwin calling us from Kerala. Ashwin, a very good morning to you. What's your query about?
Very good morning. I recently exited a position in L&T Technologies. I could capture a moment of 112 rupees per share. Now, I want to create one more position on the same stock. So, should I buy or should I sell? That was my query. Because the volume is swindling up and down very much.
Yes.
I'm unable to take a call on it.
Okay. What is the time horizon that you're looking at, Ashwin?
For the day.
For the day. Okay. That's really short. Gaurav, do you think a position right now in L&T Tech makes sense because the stock is already up 6%?
I like how Sameer just starts laughing when we have a query, which is just 1 or 2 days. Sameer just has the best chuckle of the show at this point of time. But Gaurav, go ahead with your response. I'll come back to you, Sameer, for a response as well.
I think probably for the first time we are getting a day's long query now. So yes, you can take a position here after a stellar steep up move from 3200 to 3375 in the day's trade. The stock has a little bit corrected. So I think you can consider, but do maintain a stop at 3250. Add on to your position once the high is taken out, as the stock could rise up towards 3475 levels.
Got your view, Gaurav. The next question is actually on Rolex rings, bought at 140 by Sriram from Chennai. He's asking a fundamental view, and Sameer, since we are asking this question to you, you can also let us know the reason for the chuckle in the last question, because I know it's we get a view of 1 year or 2 year from you, but I think it's just the timeline, right? That viewers have sometimes on questions.
Yeah, absolutely. It's just purely the timeline. Honestly, if you ask me, ever since real money gaming online has been stopped by the government, it feels everyone who was doing that has come into the equity markets to, try their luck at this kind of gaming. And it's not, I believe equities is an investment that you make. It is not trading. You do a little bit of trading on your investments. I understand that, say the stock runs up a lot, you sell maybe 10% of it, it comes down, you buy it back. But you should have a long-term view on a particular stock and then get in and then do a little trading in that. But no, I'm not one who is a big advocate of sell short the stock in the morning, buy in the evening, this BTST calls. Those things kind of trouble me because it's nothing but gambling. I mean, you might as well go to a casino and bet on a blackjack. I mean, any table you want, and roulette table of black or a red, and hope that you hit the number, right? So for me, that is why I was chuckling. Coming to Rolex rings, no active coverage. I have studied the company. What we did see is that growth opportunity is there. We had found that time valuations a little expensive. I need to revisit and see the valuations. But apart from, the business is strong, but I just need to recheck the valuations, which I haven't been able to do. So I don't want to comment on a buy or a sell.
Got that view, Sameer. And of course, the data that's flashing on the bottom of the screen, largely the wholesale data that comes in from CM. You do get the companies reporting the number on the 1st of every month. This is official for the industry. So the overall number for PVs as visible on the screen now up 10%, as well as the overall sales up 30%, shows you the strength that the auto index has and makes it very interesting, given the correction that we've seen essentially at this point of time as well. So there you go, the number 30% up shows you the strength even at a time where a lot of industries, companies are reporting impacts, and we put out this piece on auto in the morning that paint shops largely a lot of usage of LNG at this point of time, but we'll continue to monitor all of those on the sales data, wholesale data, and hence seeing a lot of queries on the auto pack as well shows you the questions that viewer have, because the strength is there on the fundamentals. Samir, you spoke about Rolex rings, but Sansera also, I don't know if you cover the stock, a very good opportunity in that sense, in both in the auto as well as on the aerospace defense side. Any coverage that you have on Sansera? One, I'll take it with Gaurav either way.
No, I think you take it with Gaurav. This is a stock we don't cover.
Gaurav, on Sansera, any quick view? And because very interesting in the sense that post the recent numbers, you saw that run up happening on the stock and then some sell off. Any view?
Yes, after a smart up move witnessed in the previous month, it is now on a corrective phase. It has corrected and come down to the 50-period moving average. So not much of a downside remains from here. I think this stock should found some base near 1980, 1960 odd levels, and from where a recovery can be expected. So somebody is having it. I think you should hold on to the position.
Okay, all right. We've got our next caller. Subramanian is calling us from Chennai. A very good morning to you, Subramanian. What's your query about?
A very good morning to everyone. This is related to Kaynes Technology India Limited. Can I enter in the current level? This is something for the long term. I want to start, whether I can start accumulate from this current level onwards.
Okay, all right. I'll take this up with Samir then. Samir, your view on Kaynes, and yesterday there was a good announcement coming in from the government side as well for the investment in the chip space. The stock is up today as we speak. What's the view?
I think the stock was down and I last saw it. But anyways, having said that, valuations are a little bit expensive there. I think it's trading at about 48 or 50 times FY26 earnings target, and even if the growth of the chips and all of that comes in, I think it's going to be a little further out. It's not going to be immediate. So you're buying it, factoring in all the positives. So for me, it's still a wait. There was too much hype around these chips, semiconductor, blah, blah, blah. I think till they actually get going, till the profits actually start coming, for me, it's not going to be an easy way to make money. The stock is too high. Avoid it.
And you're right, Samir, because the stock is trading with cuts of about 3.8 odd %. So my bad there. But viewers, it's time to slip into a very, very short break. But we'll be right back answering all your queries on the other side. So don't go anywhere.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
Yo Honey Singh, my story, India chapter. काउंटडाउन शुरू हो चुका है दोस्तों, सिर्फ 2 दिन है दिल्ली के शो को शुरू होने के लिए. This time it's personal. Book your tickets now on District.
First India tour in your city. Raghavan with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back. You're watching Ask Profit right here on NDTV Profit, and as always, the last stretch of the show. So if you haven't already, do start sending in your queries. You can also call us on the numbers, both of them flashing on the top of your screen right now. The next query that's coming in now, this one's on Apollo Microsystems. Our viewer has bought 205 shares at 230. He's asking if he should average now at this point of time. Samir, the defense space has been back in focus because of the war. Does Apollo Microsystem feature on the list?
Yes, it has come into focus, but no, Apollo Microsystems is something where I find, again, not only Apollo, I find valuations across the board extremely expensive. And again, what I keep saying, everyone keeps saying that the time spent in the market is important, but also the time, you're not timing the market, but also if you don't buy the stock at the right price, your returns kind of get muted. So I'm not denying the fact that the growth opportunity for this company exists. But if you buy it at these higher valuations and these prices, your returns are going to be subpar 2 years down, 3 years down the line. And then you're going to come 3 years down and ask the same question, I barely got 8% return, 9% return. So wait for the right time, wait for better pricing. Don't try to buy something just because, the news is hot around it. And for me, Apollo Micro is in that basket. I think stock is a bit expensive. Avoid it at this point, maybe closer to 160.
Okay, all right. Now, we've been talking about the LPG crisis and how it is impacting different industries. The Bombay High Court now has issued a notice after a group of LPG distributors alleged severe constraints in domestic LPG supply across Vidarbha in Maharashtra. And we have Nimit joining us to give us more details on this development. Nimit, over to you.
Yes, the Nagpur bench of the Bombay High Court has issued notice to Confidence Petroleum Limited, the Union of India and the Ministry of Petroleum and Natural Gas over a case by 6 distributors of Confidence Petroleum, saying that the company is prioritizing export of these LPG cylinders rather than as per the ministry directive of prioritizing domestic supply. Now they allege that there's a shortage of LPG in the Vidarbha region of Maharashtra where they operate, and they're exclusively dependent on CPIL, which is Confidence Petroleum, for this supply. They allege that the company has not been following the mandates of the government, which have been strictly to ensure that the domestic supply is prioritized, and they're still focusing on exports. The High Court has issued notice to the company as well as the ministry in this case. The High Court has noticed that this is a serious issue of grave importance and has asked and directed all parties to ensure that this domestic supply mandate is strictly adhered to.
Got that view, and thanks so much for that, Nimit. At this point of time, very important to keep a track of the story. But let's go across, take the next question. Now it's coming in on Whirlpool. Nayan from Dubai actually is writing into us and hope everything's good at your end, Nayan. He's holding shares at 1082, currently sitting on a loss, asking if he should average down, hold on, or exit. What would you recommend, Gaurav, at this point of time?
From the white goods segments, this is not among the personal favorites. I'll suggest him to switch over to something like a Blue Star.
GMDC is the next one. Our viewer wants to know if this is the right time to make an entry and the short-term targets for this one. Gaurav, I'll stick with you for this one.
Wait for a break above 570 odd levels, and the stock has potential to run up towards 620. So I think he should wait for the breakout point to happen. Then only he should consider taking a position.
Okay, it's time for our second rapid fire round. Samir as well as Gaurav, you both know the drill. Try to keep your answers as short as possible. The first one is from Arpan, who's writing us from Kolkata. Ask you about Sirma. If this is the right time to buy and a good pick for the next 5 years. Samir, your view?
Good pick for the next 5 years. Yes, right time to buy. I think wait till 650, 620.
620 on Sirma is what Samir recommends. But the next one's on M&M Financial. Our viewer is holding shares at 375. Samir, what should Ashwini do?
Add on some more. I think the company has turned the page, and I think it'll do well going forward.
Okay, good time to enter Paradeep Phosphates. Gaurav, your view on the charts?
Can you repeat the name?
Paradeep Phosphates.
Sorry, I won't be able to comment. Will be a pass.
Okay.
TCS bought at 3358 by our viewer Leon. What should we do with this, Samir? Good time to average?
See, again, I'm saying it's going to give 10% kind of return stock, IT companies. So from that perspective, if you're okay with 10%, yes, you can average, but otherwise, nothing great expected from IT in the near term.
Okay, Orion Pro Solutions is also the next one. 1 year time horizon is what our viewer has. Samir, they've recently announced their foray into data centers as well.
Yeah, so that will obviously do well, but it's going to be a while. The capex is upfront. For me, at the moment, it's a hold. I mean, just maybe hold or even at the downside bias.
Amar Raja, Gaurav, is it a good time to buy this counter now?
No, better to avoid.
Okay, Bajaj Finance, what is the long-term view for more than a year? Suman is asking. Samir, your view?
I think it's come to decent levels. One can start middling, but I would like to say closer to even 800 would be better. Long-term, very positive.
Is it a good time to enter Bajaj Finance? Samir, post the correction is what Shankar is asking.
Yeah, we just discussed that one, yes.
Okay, the next one is on Tata Steel. Venkatramani wants to know if this is a good hold for the next 6 months. Gaurav, your view?
Absolutely, it is a good hold currently, and even at lower levels, somewhat close to 174, 168, he should buy more.
Ashok Leland bought at 136 by our viewer Manisha. She's asking if she should add more now for the next 2 years, Samir.
No, not right now. Don't add right now.
Hitachi Energy is the next one. Muralidharan from Pondicherry wants to know if this is a good time to enter. Gaurav, your view?
Yes, can consider entering. This space is doing good. Even others like ABB and CG Power are also attractive bets.
A 4-year bet, Samir, on Mahindra and Mahindra is Aniket's question. Would you recommend that?
Absolutely. Go ahead and buy the auto. The tractor space is going to do well. The subsidiaries are doing extremely well. Like we just discussed, M&M Finance, I think the stock has good upside.
NTPC Green. S. Rao from Hyderabad wants a view on this one, a fundamental one. Samir, your view?
This is a great story. The tailwinds that will come from the government post these problems that have happened with crude and this thing, will see green energy getting up. NTPC will be one of the benefactors of this.
City Union Bank, Gaurav, bought at 100 by a viewer. What should he do with this counter now?
He should hold on to the position. He has had a bit of a run up and then a profit taking is being witnessed. Consider averaging out around 220 odd levels.
Colgate, is this a good time to enter? Nihal Mohandas from Mumbai is asking this question. Gaurav, your view?
No, I'll prefer Britannia against it.
Very volatile counter, Gaurav, but Cupid is our viewers holding 1700 shares. He just mentioned that he's at a loss of almost 22,000. Should he continue to hold, or what should be a price to watch out for?
I think some more decline is pretty much possible in the near term. 68 to 70 is the base point where I'm expecting to stock to settle. So one should hold on and average out around those levels.
Okay, Titan is the next one. Shubham wants to know if this is a good hold from a long-term perspective. It's bought at the levels of 3271. Samir, your view?
Yes, absolutely. Hold on. I think the jewelry and all the retail space will do well.
All right, that brings us to the end of this rapid fire round. And viewers, I hope we were able to solve a lot of your queries. But if you have more queries, you can tune in at 2 p.m. and we'll be taking more queries in the afternoon edition as well. Sameer as well as Gaurav, thank you so much for taking out the time and helping us with all those questions. But completely out of time, KYC up next. Do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
बिटिया की शादी है हमारी।
बधाई हो बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
Yo Honey Singh, my story, India chapter. काउंटडाउन शुरू हो चुका है दोस्तों, सिर्फ 2 दिन है दिल्ली के शो को शुरू होने के लिए। This time it's personal. Book your tickets now on District.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Hello and welcome to KYC. I am Sharad Dubey, your host and host, and you are watching NDTV Profit, a very interesting company I have got for you today, but itna jaldi nahi. I'm going to give you some hints. Try to guess the company, it's easy. It's a security management solutions company and it is coming from Patna, Bihar. Very interesting company, but a very big growth story. Also, the second hint I would like to give you is recently Fidelity has increased stake by almost 2% in the last 4 months, and now that stake comes to 7.4%. But the stock has been taking a tanking. It's down 26% from 2025 highs as well. But what company it is? ये क्या कंपनी है पटना की? ये हम आपको बताएंगे. But कंपनी का नाम क्या है? सबसे पहले उससे शुरू करते हैं. The company's name is SIS. This is what I'm talking about, and we'll discuss the company. Why are we calling them in KYC? And right now, is it relevant to call? Yes, it is. The first and foremost is the labor code impact. Q3 numbers were weak for the entire industry, but let's get into much more details of it. Let's get in the questions why we are calling this company, and this is a big question. Will the fourth quarter also be weak going ahead, especially because of the labor code impact? It did impact the financials in Q3. The second question to watch out for would be, what are the levers for the rebound in the business in FY27? Management has claimed in Q3 that there will be a rebound. When will be the rebound? Q4, Q1, Q2? That's the question. Another one is the growth triggers for the facility management and the security solutions business. Remember, security solutions businesses, India as well as global as well. So it will be very much interesting to understand the entire dynamics about it. And of course, the margins outlook. It did come back in Q3 regarding their overall margins, but will that sustain? Remember, ये 5% से नीचे वाले margins के business होते हैं. They work on volumes and of course humans. That's a staffing solutions company and other ancillary plays as well. Also, the view on the global business. Any kind of expansion plans is the company planning? New geographies to be made? That is something we'll be watching out for. But remember, geopolitical tensions are also on the rise. So it'll be a very interesting conversation here. Net debt to EBITDA, that's 1.25 times in Q3. What's the plan ahead to reduce this debt? That is something we'll be watching out for. There are of course some accounting adjustments in our analysis, जो एक एक करके मैं आपको simplify करके बताने वाला हूँ. And to keep all our adjustments and to give in views, we are joined in by Dheeraj Singh. He's the CEO of SIS, where Dheeraj will give all answers to our questions. And a lot of you have written a lot of questions also, which we'll pose it to the management. But let's talk about the company. What does the company do? We spoke about, the management solutions which comes in, but थोड़ा detail में जाते हैं. And of course, this comes in from India's Hindi hinterland, Bihar, this company. So that's a good growth story. But which are the sectors which the company is focusing on? Two important sectors. One is the security and other is the facility management solutions. It's a largely very stable business model. A lot of variations generally don't come. A little bit of regulation has come in. But nevertheless, in a market where so much uncertainty is there, the sector might be a place to find solace. More than 3 lakh employees they have, over 30 offices and 600 districts in India. Of course, they have international exposure also. And also moving ahead is the first company in the positioning in the security solutions in terms of market share, how it's actually panning out. Its first market share in the facility management as well. So it's a sectoral leader in the listed space for most of the categories which we talk about. Of course, cash logistics, they are number 2. And going ahead, in Australian markets, interestingly, they are the largest security solutions company as well. So SIS is definitely a sectoral leader. And interestingly, Fidelity has increased its stake to 7.44%. That's around 2% addition coming in the last 3 to 4 months. That's what the recent exchange filing was all about. But Q3 numbers, weak numbers coming in because of the labor code impact and some accounting adjustments, and that's why the stock did take a beating. Also, apart from this, look at the 60% revenue contribution is coming for the India business. And in terms of EBITDA contribution, let's see what the number is. That's on the higher side. Look at that. That is 67% of that number is coming for the India business. So India business is important. And definitely the foreign businesses, like 25 to 30% contribution keeps coming. Net debt, that's a bit of concern. In September it was 1.01 and now it's at 1.25. So definitely a little bit of concern coming in. How the segmental sales looking like? Higher side for security solutions India, 1898 crore as compared to 1420.
And the security solutions for the global business, that's also, you could say, on the higher side as well. The impact which you are seeing is in the bottom line numbers, and we'll get to that as well. Facility management is largely stable business, no major changes is happening, and we'll definitely ask the management about the client confidence and the key demand trends. The revenue uplift from the cost plus pricing, this is very much important. The new labor code impact, I'm going to talk about why this is important and impacting the company going ahead. The second important point should be a higher social security cost might be there, and this is recoverable. That means there is a pass-through mechanism happening to give you that perspective, because labor code is the most important thing regarding the company. The third important impact for the new labor code is the cost structuring. Over here, there is a potential margin volatility over the next 2 quarters. That's what the management has mentioned. So this is very much important. You should note it down, because there might be more pressure in the stock in the coming days. The operational systems, there's a one-time implementation effort also. If you're a long-term investor, these stories don't matter. But if you're a short-term, medium-term investor, of course, there might be some overhangs in the stock. The structural advantage for the long-term investors, organized and compliant players get more market share, and they are already the largest player in a lot of categories. That means they'll get more market share again. So this is a benefit of the new labor code impact coming in. Larger the player, better the chances of consolidation, and that makes it very unique as well. But another thing which is unique are the ratings which we give to our companies in KYC. The basic numbers, income statement, balance sheet, cash flow, this is the holy grail of numbers which we give all details to you. The return ratios, be it the ROCs or the ROEs, all of them are something which we judge. Shareholding, how much things have moved around with the FIs, DIs, or even the promoters is something which we track. Apart from that, street credit, kitna paisa bana, be it multi-bagger or in the short term, has the company made any money, that's something we'll get. Valuations, we'll try to compare them with their listed peers. Of course, I have taken Quest Corp and TeamLease to be compared with this company. We'll get you that analysis. And also, are the analysts bullish on the stock? If yes, how many buy ratings, what's the 12-month target return potential, all the details we'll get to you, but one by one. सबसे पहले शुरू करेंगे इनकम स्टेटमेंट से. दिस इज वेरी मच इंपॉर्टेंट एंड सबसे बड़ा कंसर्न मुझे यही आ रहा है. Now the revenue itself, you see, is not major growth. It's already a big size company. It's one of the biggest players, so the base is always very high for them. But the concern starts coming in when their average margins is around 4% odd. Now that has come down. That becomes a concern for me, including the PAT numbers as well. So overall, last 3 years issues definitely been there, but the Q3 numbers, look at that. That's also a concern coming in. And the net profit, that there's a loss happening, 138 crore rupees. This is of course the labor code impact. That's why weaker set of numbers come in. So will this impact in Q4 also, and that will be an overhang? That is something which we are watching out for. And yes, the margins will be impacted for the next 2 quarters. That's what management has already stated. So currently for income statement, it is a strong thumbs down for SIS. Let's talk about balance sheet. How much changes in the balance sheet which has come in? Of course, the reserves are very decent. The company's size is good. The total equity base also, you look at it. Nevertheless, it's very well managed. But the concern definitely comes when the borrowing goes up. But to negate that, there is an interesting data which I'd like to talk to about. That's the cash and bank balances. These are the 2 data to actually look at. Borrowings are roughly at 1501 for FY25. Remember, 9 months have passed after that, and still that net debt to ratio which I had explained to you, that does show some concerns are there on the debt portion. But 1173 crore rupees of cash balance is there, and that is where we feel there is a good comfort. Will there be a buyback? Will there be an acquisition? That's what we'll ask the management as well. कि इतना cash के साथ आप करोगे क्या? That's the important question. So it's a neutral rating when it comes to the balance sheet. Let's talk about the cash flow segment, and there's a lot of lumpiness also at times it's involved. But the company generally in operation cash flow has been going up, and that is something which is good. It's gone up to 394 crores and then a big jump to 742 odd crore rupees, and the conversion is there, the cash flow to PAT, that is significant here. Net cash flows have also improved, and even the numbers which you saw in the 9-month numbers, they are very stable. Remember, ये stable धंधा है cash flow का. Largely, you could say that the cash deployment is something which everybody looks for in a company like this, and SIS is known for buybacks as well. So net cash flow management is strong. There's nothing to actually go into the depth of it, because the numbers are saying the story. So it's a strong thumbs up when it comes to the cash flow segment. Return ratios, let's see how things have panned out. The ROE numbers, इस धंधे में 12 से 15% का रिटर्न रेशियोज आप एक्सपेक्ट कर सकते हैं. Third quarter, you see it's around 11 odd %, and then it has been slowly going up and it's maintained at that around 14 odd %. So what you are expecting, you are getting that. Nothing very major. It's a very stable business model. And when we are calculating that, remember, this is calculated post adjustment of impairment charge and gratuity expense. Also, ROC numbers, if you look at it, this is also doing decently, and it's touched that 15% mark. It's at the highest level. So this is pretty decent, but that's all. It's not, earth breaking or on the upside or the downside. It's pretty much neutral, what you can expect if you're an investor in SIS. And of course, there are some adjustments also. In ROC, adjustments is of course on the acquisition related expenses. That was just a minus 7 odd crore rupees, but that's our duty to give you a very well balanced view. So right now, the return ratios overall, it looks decent, and I'll give it a neutral rating. But let's move on to the shareholding and see what the company is all about. The promoters are very decent, 72% stake, no change at all, and that's a good sign also. At times, if they keep on adding, that's important. Remember, 75% minimum public shareholding norms we have. FI is interesting, 17%, and now it has fallen to 12%. But I would like to give you a very important update on that, because this number might be on the higher side again in the month of March, because Fidelity, which is an FI, they have increased the stake by 2%. So this amount can be 14% also. So something is definitely brewing here, and the DIs, they have also been constantly lapping up. Remember, it's a margin of safety kind of a stock, a very stable business model, market leader. And in times of uncertainty, people fall on stocks like this, and everyone is increasing the stake here, FIs, DIs, and this is what I like about the institutional shareholding going. So it's a strong thumbs up when it comes to the shareholding. Also, apart from shareholding, let's talk about the other important factor, and that is the street cred. How much money has been made? Yeah, bana hai ki nahi? That's the big question, and the concern is definitely there in this counter. For 1 month, for 6 months, year to date, all of these criteria, the stock is down. The stock hasn't made any much money. So definitely, even if people are finding solace in the stock, the money hasn't been made yet. 1 year also the stock is flat or down, and last 5 years, if you're a long-term investor, this has tested your patience and the returns haven't come. And that is where we feel it's best to get this company to understand, is there any inflection point which is going to happen where the returns start coming to your investments, or will there be more weight there? So street cred is a strong negative because paisa hi nahi bana hai. Let's talk about valuations. Because of so much correction, the valuations become very cheap of the stock, and we have taken the 12 months forward PE ratio. We have taken Quest Corp and Team Lease. That's on the higher side. Remember, these businesses on the price to earnings basis, they are generally below that 13 mark. So this is at average in line. Of course, there is correction of 30 to 40% from their peak, but this seems a bit cheaper with the amount of fall which has happened. But it's a stable business model, and that's what everybody is looking for in current markets. Maybe the valuations are juicy for this stock, and that's why I'll give this a strong thumbs up when it comes to the overall valuations. But analyst take, that's also very much important. What are the analysts talking about? There are 5 analysts who are tracking the stock. None of them have a sell and a hold. That means all 5 of them have a buy rating. But let's see, itna correction hua hai to return bhi zyada hi mangenge. So the return potential is on the next 12 months, as per Bloomberg average, is 45% from the current prices, and the 12-month target price is 421 rupees per share. So definitely the street is looking for a good up move in the stock going ahead as well. And maybe after 2 to 3 odd months, if the numbers start coming in, we'll see a very good recovery in the stock. So net analysts are very bullish. So we'll give this a strong thumbs up as well. हमने बहुत बात कर ली थम्स अप की, थम्स डाउन की, न्यूट्रल की, बट टोटल केवाईसी रेटिंग क्या है? दैट्स वेरी मच इंपॉर्टेंट. सो लेट्स गेट यू द एंटायर केवाईसी रेटिंग फॉर SIS, हाउ थिंग्स आर पैनिंग आउट. इनकम स्टेटमेंट, it needs to perform. The labor code impact has hurt the sentiments. Balance sheet is decent. Cash flow very strong. It's a stable business model. Return ratios largely neutral. 14-15% का return ratios आता है. Shareholding is good. The FIs are lapping up, DIs are increasing their stake, and street cred, however, the investors are already there in the stock. They are under the pain. Long term ho ya short term, pressure bana hua hai. Valuations are attractive because of the correction, and the analysts are still bullish. 5 of them have a buy rating, and 45% plus return potential from current levels is what they are estimating. So that's pretty much interesting. So let's give you the entire picture for the rating. On the higher side, the average, it's 5 out of 8 for SIS. and people are looking for that inflection point for the stock. And the stock, if it moves on the positive side, that will be something which the long-term investors will definitely cheer. Just to understand, give it more perspective, we will be joined by Dheeraj Singh. He's the CEO of SIS for the last 13 years, but there's an interesting street cred about him. He has leadership positions in McKinsey, Lan O'Rourke, and also V Karma Capital. So he has gone across private funds and owned companies also, and education is there from IIT Bombay as well. So Dheeraj will give us the entire picture of where SIS is actually standing. And joining us is Dheeraj Singh. Good afternoon, Dheeraj. It's always a pleasure to have you, and it's very nice to see a company from Patna becoming a big global company. But labor code impact, that has been the biggest question. In third quarter, the numbers also were impacted. Of course, we won't talk about the third quarter, but we want to know about the fourth quarter and how things are panning out. Labor code का जो costing impact है, fourth quarter में भी आएगा?
Okay, thank you. I was watching your introduction before this, and I liked your one statement that ये धंधा stable cash flow का है. So that was very well put. Coming on your specific question about the labor code, we were very conservative in our Q3 provision. And we took a large provision for almost 297 crores, a one-time provision. So that impact was a one-time for Q3. From Q4, it will be on a normalized basis. On the margin side, I think there's been a continuous uplift on the margin percentage, especially contributing from our facility management business, which is now upwards of 5%. And the security had already come to about 5.5%. International had fallen, but that is also picking up. So the margin percentage, we don't see too much of a pressure going forward in Q4 onwards too. You talked about the labor code impact. Yes, there will be some transition over the 1 year, but as you yourself pointed out, ours is a cost plus percentage model. So these are statutory compliance that we have to do. And the government has come out, rightly so, with all the compliances it expects. And it is a joint responsibility now. Mark my word, these are the joint responsibility, liability of the end client and us. So both of us are responsible for ensuring the statutory compliances. And this is where I see a structural shift happening in the industry, where a lot of the unorganized players in the past, their arbitrage opportunity of cutting costs, compromising on compliances will soon fade away, because any client will be very non-wise to actually take the risk of going with a non-compliant security services provider or facility management provider. And therefore, it probably gives us a larger market share opportunity to tap into.
And Dheeraj, of course, this is the same question. I'm just going to repeat and just get into a little bit more details about it. You did mention that the next 2 quarters, there will be a little bit of margin pain as well. But for the long-term investors who are watching KYC, their query is, कब ये solve हो जाएगा? 2 quarter, 3 quarter, by when we can see it? Is this positive rebound which you are talking about, will we see that in the entire FY27 or the second half of FY27?
If you look at our normalized profit numbers as well as the EBITDA, it's constantly been increasing quarter on quarter. We've had the one-offs of the impairment and the gratuity provisions, but those one-offs are now behind us. From Q4 onwards, we expect a steady increase in both our rupee value, EBITDA, as well as the PAT numbers, and the margin percentage will remain stable or increase. Long term, we want to aim as probably one of the few companies in India that come in the 500 crore PAT bracket, and that can consistently grow on a 15% year-on-year basis, and at the same time deliver a ROE and a ROCE of more than 15%. We are well on track for that, and this year, by the end of Q4, you will see our numbers delivering on that path.
So that is definitely a very bullish and a relief to the long-term investors who are watching KYC as well. That's a very important statement coming from Dheeraj ji. Apart from that, let's look at the performances. There's your security solutions business, which is there. I would like to just point out the outlook. Right now the Q4 numbers, how the demand trends, client confidence looking like for your security solutions business in India.
The security solutions is a hedge business. So when things are up or down, the security is always in need. But we are seeing the demand come from now newer segments. The entire mining sector, for example, we are having some large contracts there. The entire metro segments, or even the data centers. So the new sectors continue to offer opportunities for a security market. We on our side are getting more into the technology side of security also. That is a need because it will help optimize the cost for our end clients also. And we have 2 or 3 businesses that focus on the technology part of it. Business specifically called vProtect. It is an alarm monitoring and response services. It manages 30,000 sites as of now, where we provide the alarm services for any security alerts, fire alerts, and we are combining that with our manpower services. So it's a man-tech solution that we are offering to all our clients.
Right, and Mr. Dheeraj, correct. We talked about it, and the facility management business. This is a very stable business. What kind of rate of growth the industry is going at, and what rate the company is going at in this segment? If you could just share that.
So the industry growth is about 12-13%, and our revenue growth on facility management in the last 1 year has not been to our expectations, to be honest. We had focused on the margin fixing. We have fixed on the margin percentage. And this year onwards, the revenue part is what we will focus on. And we expect it to be above the market industry growth. So more than 12%.
Okay, so you are expecting something better than the market share of the industry. And when that happens, of course, there is a market share gain for an organized player and maybe a leader also in most of the categories which we discussed already in KYC. But the cash bank balance is something which is always something which I comes to my eyes for a company like yours. Generally, there is a buyback or there is something. इतना कैश का क्या करने वाले हैं, कहाँ पे उपयोग रहेगा, where will be the deployment be coming in for this much amount of cash? Is it going to be in the new businesses, new expansion of geographies? Shareholders want to know, or maybe another buyback.
Very correct. So we do generate a lot of cash, and that is one of the big attractions of our business. We have returned more than 500 crores to our shareholders through a combination of buybacks and dividends. And we expect to continue this policy going forward. However, we don't believe it is optimal for our shareholders to start retiring debt, which is working capital debt. Largely, that's the only debt really that we have. And I think we will continue to scout for opportunities for acquisitions as well as incubations. We have delivered very superior returns on any incubation that we have done in the past. And for example, a business like the residential segment, B2C for security, the technology part of the alarms business, is a very large business globally. And we expect to put more money in that because that is a business that requires, like any B2C business, a reasonable amount of capital. So we will scout for opportunities and judiciously deploy the cash reserves that we have, apart from returning to our shareholders on a regular policy basis.
Right. And the last question, Dheeraj ji, is on your international business. What's the growth outlook for that? And secondly, geopolitical tensions भी बहुत हो गए दुनिया में. आपके धंधे में कुछ impact ऐसा आया है? Just want to get the answer of both of these questions. International business outlook and geopolitical issue in case it has impacted you, because Australia, you have a good sizable chunk and other countries as well.
So international business is probably seeing its fastest growth ever. And this year, it's about a 20% growth that they should witness in the revenue side, backed by a very solid order book that they had from last year onwards. So the revenue side looks very strong. The margin has been improving quarter on quarter, and we expect that to continue. So international business, we are not concerned, especially even in the current geopolitical situation. Fortunately, all the countries we operate in internationally, New Zealand, Singapore, and Australia, are largely untouched. And if you want to get into any P&L impact, the Australian dollar is appreciating against the rupee, so that might, on a short-term basis at least, be positive itself.
Sure, that's a very important view coming in. So there is no major impact on your international business as well. Thanks a lot, Dheeraj, for taking your time out and giving your views and clearing a lot of doubts or the queries posted by our viewers, especially regarding the labor code impact. It's always a pleasure to talk with you. So that's the management of SIS. Dheeraj, he explained us what in the long run would be beneficial for the company when it comes to the labor code impact. No important issues in the international business, and most importantly, the Q4 might be a turnaround quarter. Interesting to watch the stock. It's deeply sold. Maybe technical up moves we can see. But that's all for SIS and KYC. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
In a month that moved markets, shifted diplomacy,
affect the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsaan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Yo Honey Singh, My Story, India Chapter. काउंटडाउन शुरू हो चुका है दोस्तों. सिर्फ 2 दिन है दिल्ली के शो को शुरू होने के लिए. This time it's personal. Book your tickets now on District.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch.
after Iran's supreme leaders warning over keeping Strait of Hormuz closed. US President Donald Trump claimed on social media that country was winning the war and Iran should be ready for more damages. Amid supply crunches and Hormuz closure threats, oil's rally continued. Brent stays around about $100 per barrel, even as US administration announced the unsanctioning of Russian oil. Benchmarks extend the losses today on markets, with Nifty losing almost 300 points and Sensex shedding 900 points over week opening. Broader markets mirror the benchmarks even as all sectors trade in the red, barring FMCG. Rupee sinks to a fresh record low, with the Middle East war showing no signs of abating. Stronger dollar, heavy FII selling and weak sentiment drag IT to record low near 92.42 versus the greenback, so rupee at lowest level. Metal stocks remain trade under pressure as profit booking continues to ail the sector. All key players shed gains. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar. Let's take it straight to the markets then. And even 24,000, that 23,400 level has been broken and breached lower by Nifty 50 at this particular moment, shedding close to 300 points on Nifty 50. And it is a broad-based sell-off and weakness because of escalation of the US-Iran tension, and on the other hand, the boiling crude oil prices. So that is putting an impact on overall market and even money market, and rupee also touching its lowest level. When we talk about Nifty 50, it's almost 300 points down right now at the current moment, and all the sectoral indices are in the red, with defense, metals, auto, all of them weakening in trade, apart from the only two sectors. First of all, FMCG is the only sectoral index which is in the green, and on the other hand, some of the other green energy counters are the ones which are really showing gains. But remember, the broader market with mid cap as well as small caps, they shedding more than the key indices. So therefore, a broad-based selling pressure is being seen in the market. But rupee is to be seen very, very closely. It has touched its lowest point. A new record low has been touched. Second day on the trot by rupee. Let me take it straight to an expert joining in with more details on the rupee movement, which could be a concern now. Naveen Mathur, who's the Director, Commodity Currency and Gift City IFSC at Anand Rathi, joins in. Naveen, good to have you on NDTV Profit. My first question, rupee at these low levels and touching a lower record level every day. Is this coming in as a worry? And RBI intervention has been seen at the lower levels. Today also, are we expecting it? Naveen?
Can you hear me?
Yes, please go ahead.
Okay, so thank you for having me on the show, Nisha. Yes, yesterday we saw an all-time low of rupee against the dollar at around 92.36. And today we are again witnessing an interbank spot market low of around 92.4375. The fundamental reasons still persist. We have the Middle East tensions, which are continuing in spite of the U.S. administration talking about that the war is about to end, or very soon the war would end. But the uncertainty still looms broadly. And the dollar index is gaining strength. So the dollar index is quoting at around 99.83 currently, which has moved from the last week of January this year at around 95.55 low to around 99.00 levels. So that is one of the major factors. The fundamental factors are beyond these The market sell-off pressure on the rupee continues to be over the last couple of sessions, which is also, I would say, putting up the weakness into the rupee. The combined effect of the higher oil prices, the global uncertainty, and I would say on a stronger dollar are the main reasons for rupee hitting new lows yesterday and today again.
It's a vicious cycle that we are seeing because lower rupee also means that our currency has lower purchasing power, and with oil prices getting higher, oil becomes even more expensive for our economy. So that's a big concern coming in. Any insights on the outlook of the price resistance levels, base levels, and also the uncomfortable levels at which RBI should intervene?
Nisha, the RBI intervention is persisting, but is likely to remain moderate, given the low visibility on the timing to end this particular Israel and the Iran conflict. Now, it has kind of become a little broad-based. We have the number of the IBI, the RBI reserves, the foreign exchange reserves. Before, a day prior to this war, which was an all-time high of around US dollars 728 billion. But then post that, I think the RBI has intervened, as we understand from the markets. The RBI has intervened to cut down on the weakness for the rupee against the dollar. But then it is still a very tricky situation. I would say that 92.50 would be something to watch out for. The RBI would not like the rupee to extend the weakness beyond 92, but still, because of the uncertainty and the low visibility, as I said earlier, on the timing of this end of this particular conflict, may be a very tricky question to be answered. But then I think 92.50 would be a very, very crucial level which RBI and the other people in the markets would be watching out for rupee against the dollar.
All right. Thank you so much, Naveen, for your expert take on rupee movement. 92.50 is the next level to be watched out for, and that number will be uncomfortable for even RBI at the lowest point rupee, and that putting also sentimental pressure on the markets. Talking about markets, closer to the lowest point of the trading session today, 300 points lost on Nifty 50. Sachin Shah, the executive director and fund manager at MK Investment Manager, joins us now. Sachin, it's a pretty weak day of trade and volatility is at the highest level and there is all around weakness. How do you gauge the sentiment given that there are so many uncertain factors putting pressure on the markets?
Yeah, hi. Thank you so much for having me on the show. Yeah, so clearly I think the sentiment is fairly weak at this point in time, and I think it's been that for almost now nearly 2 weeks that we are seeing this clearly. And I think, but let me just also add to this is that in our interactions with a lot of domestic investors, we are not seeing that kind of any nervousness or panic or anything of that sort. So I think it's largely driven by foreign institutional investors who are really selling in the markets quite heavily, which is, and ferociously, I would say, which is actually what is getting reflected in the markets at this point in time. But clearly, I think when we speak to a lot of domestic investors who are long-term oriented, they are actually thinking of capitalizing on this for their long-term investments.
All right. When you say that capitalize for long-term investments, but it's a falling knife, Sachin. If you really take a look at the last 2 weeks of trajectory of Nifty 50, it has been a downward trajectory overall with volatility in the middle. So is it really buy on dips market, or is it really stay with cash, cautious approach and let the prices settle a little?
Well, this falling knife theory and all of that makes sense for probably short-term traders and those kind of people. But when somebody's thinking about long-term investing, I think what is more important is in terms of the valuations, in terms of is the price factoring in most of the negatives which are around, or even what is going to probably play out for the next few quarters or maybe few weeks? Because what we have seen is that whenever this kind of geopolitical tensions have emerged and markets have corrected sharply, over a period of time, over the next 1 year, 2 year, 3 years, markets have delivered very, very decent returns. And you can check the data whenever this kind of wars have happened or any geopolitical tensions, or in fact, even a very recent thing when COVID happened, when we had a minus 30% in just one single month, which is March 2020. After that, we all know how markets actually bounced back very strongly. So actually for long-term investors, the way we think about it is that some of these blue chip companies today, which are available at very, very reasonable valuations, can they offer you good double-digit compounded returns over the next 2, 3, 4 years? And if the probability of that is say 60, 70, 80%, probably this is a very good time to actually invest.
All right. So sure, blue chip companies is what you also mentioned, and they are always safe haven with good track record and momentum whenever the markets look good. But apart from that, Sachin, some of the green energy space as well as the FMCG consumption space are still doing well. What will be your approach in these segments and in broader markets? What could be the areas which are looking very cheap and probably mouth-watering to invest with lower downside risk?
Yeah, clearly. So, in this kind of an environment, the FMCG businesses, the consumer businesses are more like defensives, which is where you are seeing, when investors are trying to hide themselves, they'll probably park some money, and if they have to remain invested in equities, they'll park some money in some of these businesses. But I think the way to think about it is that where is because what is relevant is only future. And from that perspective, if we believe the growth is there in some of the other sectors, say in whether it's the private sector banking, whether it's auto, whether it's financials, whether it's pharmaceuticals, some of these sectors probably offer much better growth over the next 2, 3, 4, 5 years. Thinking about the India's demography in terms of the young and the aspirational demography that we have, or even in terms of our mega trend on the export plus one, which is China plus one, Europe plus one mega trends. So there are quite a few industries over there which today some of the stock prices are under severe pressure because of the selling pressure rather than any fundamental reason. So this is more of all technical and probably very short term or very medium term circumstances. So I think that is where probably the opportunity is much better at this point in time.
All right. So Sachin, while you're giving a much more positive commentary on a very shaky day in the market, I want to ask you one thing. Are we also looking at the long-term impact of even whatever damage is being done at the current moment with lower rupee, oil getting a constraint in terms of the supply chains and oil price hike? On the other hand, our inflation could be pushed up because of the LPG shortage and therefore having an impact across many sectors. And that could also make the inflation numbers in a little longer period of time uncomfortable for the RBI in terms of the interest rate trajectory. Are the markets baking in any of the long-term impact of this short-term, assessment of the developments right now, hypothetically thinking that this de-escalation could happen in some time?
Sure, I understand where you're coming from. I think the way to think about it is that as an investor, we have to be always optimist. That's first point. Second, I think more important is that do we believe that this war will continue for more than a few weeks or few months? Because, whatever you're talking about in terms of hyperinflation, rupee depreciation because of higher oil prices, gas prices, maybe all of this will reverse as soon as there is a de-escalation in the war. I think that's the other side of the coin. And if that happens, then obviously there is no long-term impact. These are all short-term issues. And that's why I mentioned that blue chip companies are the companies which will actually be able to survive during these difficult times. And as soon as the times get better, they will actually emerge even more stronger. So that's how we are actually positioning ourselves.
Point there. I have to play devil's advocate in the interest of the caution and the nervousness in the market. But thank you, Sachin, for giving a very positive outlook, and also the pocket of safe haven of blue chip companies with good track records at good valuations right now for a long-term investment. Thank you so much for joining us with your expert take on the market. All right, let's focus on one sector which has been a cause of worry as valuations really plunged. The IT sector performance has taken a negative turn in view of the AI disruptions as well as the cyber upgrades. But despite the downturn, the brokerages remain overall constructive on the sector and are hopeful of an uptick in the coming years. Jasmeet, my colleague, brings a lowdown on the valuation picture and also the growth story of the tech sector. Tell us all about it, Jasmeet.
Well, thank you for that. If you look at the overall valuations on a 5-year average, they are standing roughly at 25 to 50 odd times. But at the current valuation, when you look at 12 months forward, the 1 year forward valuation are nearly halved. So the sharp decline in valuation comes on the back of that AI fear which we have been seeing in the market over the last couple of months. So 2025 was the year where the earnings saw very slow growth impacting the valuations. For 2026, the overall AI, cloud and Anthropic AI tools impacted further the valuations, and now valuation nearly halved in the future what were there in the 5-year average, and currently they are at multi-year low. Now if you look at the brokerage angle of it, how the narrative has changed over time, while the analysts have maintained, most of them have maintained the buy rating on top IT stocks. Now what they expect is they expect a good return in IT stocks, and they feel the business model is not yet broken and IT will be an implementer going ahead. Now if we look at something like in TCS, it has an highest return potential of 43% with roughly 35 buy calls on that particular counter. While if you look at something like Coforge, it has 29 buy calls and return potential of roughly 69% from the current levels. So we do see a great upside from here on for IT companies, but again it's a wait and watch of how they implement the overall new AI tools and how does the growth span out going ahead. Now if you look at how brokerages have changed the narrative, we have something like a Nuama's node which has maintained buy rating on all of their top 10 IT stocks. Now what they say is they overall maintain that initial cannibalization of revenue is something that will be there, but the overall expansion in the order book, the TAM value will be much more greater. While we also have HSBC node which expect the shift to come from beat and raise in guidance to go up until realistic to more aggressive guidance, and they expect Infosys and HCL Tech to give an aggressive guidance going ahead in Q4 as they have already beaten their past guidances. While we also have Nomura which says in the overall IT pack that the overall reaction in the market is premature and overly done at this point in time. The business model still remains intact for such companies. While last year also have CLS's maintained outperformance TCS with a 29% upside from the current prices. Now what they see is the SaaS implementation remains the key, and that is something the business model is still working towards. Where though we have all AI tools, but we need implementers, we need IT companies to implement those AI tools to regular IT services, which remains the focus, and that is why the IT companies remains in focus, though they have beaten down so far in the year. Now if you look at what is the road ahead and what can we expect going ahead, while the Gen AI first will compress certain amount of revenue as per the street, but then the overall value which they will be adding, the AI will be adding to the IT service revenue is pretty large. If you look at the second aspect, we do see the inflection point is yet to come, where the AI models are currently pivot for IT companies will move into more functional roles. While thirdly, the companies could see a shift from headcount billing to the overall model-based billing, where they're getting billed based on the work they do, not on the headcount they indulge in. While on the fourth point, the TAM of Indian IT companies is expected to reach between $300 to $400 billion by 2030, seeing an upside from here on. While lastly, the near-term volatility do exist in the short term, where we see the IT sector is down to 20% in this particular month, and so we expect the near-term volatility, but over medium and long term, the street remains positive and constructive for the overall IT pack.
All right, Jasmeet, thanks so much for putting all that perspective together on the overall IT sector and what brokerages are saying about that. Let's get an expert to talk more about the IT sector and how to really view the sector in terms of investments as well. Sandeep Agarwal, the fund manager at Sovilo Investment Managers, joins us now. Sandeep, pleasure speaking to you. You heard my colleague Jasmeet really compiling all the views coming in on the sector. What is your view on how to play the IT sector? Is it a buy in your view?
Hi, good afternoon, and thanks for having me on the show. So, as already rightly mentioned by Jasmeet, that AI is, a little deflationary in nature, and that was the primary cause. 15 months back, we sold everything in our PMS in IT. barring small 1 or 2 position. And we were of the view that when, there is a 4-5% annual deflation, which will continue for 4-5 years, and you are not able to grow more than 8-9%, then at net 4-5% growth, how will you justify this 30 multiple, 35 multiple? And that was the primary risk, contention and risk which we were highlighting. But 10-15 days back, once, almost 40% correction has happened, since last couple of weeks, we have turned very, very positive and constructive on the space. And our view is this, that with even 5% growth, and if assuming currencies at 92, we get around 10-12% PAT growth for the sector. And 10-12% PAT growth, you can easily give, 1.5 to 1.8 time PEG ratio to the large names, and maybe little 1.8 to 2.2 to the mid names. And most of the stocks are below that. So there is definitely a 30-35% quick return, which I expect in most of the large and mid cap, except the ER&D space where we are still negative. So we believe that in ER&D, there is a lot of benefit which has happened due to the Russia-Ukraine war 2 years back, and that momentum is still there in terms of revenue growth. Once that thing phases out and there is some peace there, lot of this high growth ER&D plays will have a challenging time for some time, and they are all trading at obscene valuation. So I would prefer IT services over ER&D. We are not recommending any buy, or we are not buying anything in the ER&D space. We are only buying right now only the IT services companies. So that is what the view is, and I believe that there is good money for the investors who are willing to wait for 1.5 years from current levels.
All right. So a very big takeaway coming in that you are looking at IT services as a good buy and not ER&D companies. And also in 1 month, Sandeep, the entire sector has lost over 10%, and that is making the valuations much cheaper for you. But looking at the AI disruption, how much of a weightage is coming in because of the AI scare which led to a huge sell-off in the IT sector? Is that a point of worry, and how are you assessing the companies based on the AI differentiator? Because some of the companies like Coforge, HCL Tech, TCS have really beefed up their portfolio on the AI capabilities.
So see, AI is like any other disruption in the past, except for the fact that all other disruption in the past, the volume of work and the value of work has never gone down. It has got reallocated to the newer technology. So we being into the space of providing the manpower for every kind of IT services, application services. So what happens that whenever a new technology comes, we have to realign and reskill our workforce to the new technology, and that is what takes 4 to 6 quarters, and then we get a lot of volume of work and everything. Challenge is that for that 4 to 6 quarters there is always a disruption, and we are going through that phase. I think large part of the disruption phase is over, 75-80%. We may have problem for 1 or 2 more quarter maximum, but you cannot time the bottom of it. So I think our business is to hire people from the market, train them, and redeploy them for the clients, and I think that business doesn't change at all. Yes, there is a 20% effort cut which has never happened in the past. Spread that out over next 4-5 years, because that is the contract period. So you have annual deflation of 4-5%, and against that you are right now getting a benefit of 4-5% or more from the rupee depreciation. So I think net there is no challenge in my view from the earnings perspective. Yes, everything is getting sold. It is very tough. Markets are like extremes of pendulum. At one point of time when I was telling consistently that these valuations are unsustainable, then there was a lot of buyers, and now when we are turning positive and we believe that this is a good price, then there is an extreme that people still want to sell. So markets always move into extremes, and this time is no different. But yes, I'm confident that from here people will make money, lot of money in the space, except the R&D space.
All right. So Sandeep, you have explained your strategy on the IT sector very well. And one big takeaway that I get is that because of the AI disruption and all that baked in, and of course rupee is helping IT, one big takeaway is definitely that the overall sector has been re-rated and these valuations look much more stable at this point. Thank you so much, Sandeep, for joining us with your expertise and your take on the IT sector. Completely completely out of time on this edition of Markets at 12. But news and views really continue. Keep it with NDTV Profit. Thanks so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Yo Honey Singh, My Story, India Chapter. काउंटडाउन शुरू हो चुका है दोस्तों, सिर्फ 2 दिन है दिल्ली के शो को शुरू होने के लिए. This time it's personal. Book your tickets now on District.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India tour in your city. Rock on with Shankar Ehsan Loy.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey and Tamanna Inamdar. Both are standing at the NDTV Profit market pit with all the action in the markets. We are seeing that crack, Sharad, that has come in yet again. Broader markets are seeing deeper cuts as well. The mid-cap, small-cap index, cuts of over 2% over there. So the 23,300 mark, which has been one of the crucial support levels, also has been broken in intraday trade now.
Well, thanks a lot, Hiral, for that. And we look at the overall market, how the sentiment is. We are at the day's low level, and beat Nifty and Nifty Bank, there's a big sell-off happening. Last two sessions, of course, FI selling was also much there. And joining us is our managing editor, Tamanna Inamdar. Tamanna, massive sell-off in the markets?
You know, we were speaking this morning, Sharad, that if 23,300 gets breached, then it's an important Lakshman Rekha, which now you are falling below, which we have decisively. Just look at, you're seeing this. I wonder if you can zoom this in, because you're seeing nearly a 400-point cut. The last few minutes is where this huge knockoff has happened. And there could be a variety of reasons, but if you're really wondering why, look at what's happening in this Iranian war. This Middle East war is going out of control. That's the problem with the street right now. And there is no real closure of it. That is what you're seeing, which is why this kind of concern. The Iranians are not backing down. The US is not seeing any potential of really coming out of this unscathed. And the claim in the Iranian press could have been one trigger, that the whole aircraft carrier that they had sent, the US had sent to Iran, they claim that they have attacked that. Now, I don't know if it's a true claim or not, but that is one of the many reasons that you're seeing. They should also, I'm sure you'll do a Brent check to check what's happening there, and the sharp spike in the VIX. So there's something that's happened geopolitically in the last 10 minutes or so, which has caused this kind of a spike.
Thanks a lot, Tamanna, for that. And definitely, apart from this VIX front, the Indian rupee, that's also hitting its fresh record lows as well. And just like to give us a perspective of the factors to watch right now, most importantly is definitely going to be the Indian rupee. Is there any RBI intervention coming in? That's something we should be watching out for. Anything else, Tamanna, on that?
No, I'm saying 92.44 is a rate that has never been seen on the rupee. So you're seeing the entire trajectory fall off a cliff at the same time. Usually, the RBI does have some kind of intervention come in, and whenever you speak to the governor, he will always say we will do everything that is required. So maybe you will see some intervention coming in. I think the only positives that can turn sentiment right now is that if we have some clarity on whether Indian ships are being allowed, or ships coming towards India are being allowed through the Strait of Hormuz. That's the only sentiment change that I can see happening if it is proven correct.
Thanks a lot for that, Tamanna. And of course, there is a big sell-off happening in the markets. The broader indices also not supporting. And there might be oversold positions as well. And Hiral, we never know. There might be a short covering also in the second half. We can expect excessive sell-off already we are seeing in the markets as well. And Nifty is hitting its 11-month low levels. Also, apart from this, the intraday levels, it's fallen below that 23,300 mark, which Tamanna mentioned. Oversold position, that is where we might see some sort of short covering. Metals, PSU banks, auto, massive sell-off in all these counters. And after 2 days, even the broader indices have given up. And that's the problem here. The technical strength is getting impacted, rupee hitting its fresh record lows, and importantly, if we talk about it, avoid any weekend carryover trades, because there's so much happening here. So this is something very much important. Expect this volatility to be there in the news flow in this weekend as well. A lot of discussions on the market at the market pit. Over to you, Hiral.
Yeah, Sharad, I mean, when you mention about auto as well, I think this is going to be one of the worst weeks in terms of where auto as a sector goes in several years. I'm talking about the last
4 to 5 years probably, and that's something that we should explore as well. But thank you for that. In fact, Lawrence Belanco in his note also indicated that there is continued weakness, and that is leaving the markets pretty much vulnerable to a further weakness from here on. In fact, the next chart support was only seen at Feb or April 2025 lows, which is at 21,777 and 21,800 area. In fact, what he said is a move back to the 2025 lows would actually negate the cup and handle formation, and this consolidation pattern has actually morphed into a more complex pattern. This consolidation pattern requires more time to develop. May, June, August, September 2025 lows at 24,300, 24,500 is now seen as a major resistance for the markets, and the 50 DMA and the 200 DMA are coinciding at levels of 25,341 and 25,382, and to provide an additional layer of resistance ahead of 2024 and 2025 highs.